Hey guys, good morning, welcome to the live session of Stocks Network Trading. My name is Dave, guys, my partner is Ron. Let's get down to business here, guys.
In on US30, sell, okay? I'm jumping in. Guys, that's a 100 pip drop. Yes, we caught it. Hey, guys, 200 pips, please, secure.
Hey guys, good morning, welcome to the live session of Stocks Number Trading. My name is Dave, guys, my partner is Ron. Let's get down to business here, guys.
In on US30, sell. Okay, I'm jumping in. Guys, that's a 100 pip drop. Yes, we caught it. Hey, guys, 200 pips, please secure.
Hey, good morning, everyone. Welcome. Thanks, everyone, for joining Stock Sniper Trading. My name is Ron. My partner is Dave. Welcome, everyone. It is 6 a.m. Eastern. It's Wednesday, September the 10th. So thanks, everyone, for joining. We appreciate everyone's support. Thank you, everyone, for all the likes, the subscribes, sharing of the channels to your other communities and things like that. We do appreciate it here at SST. Thank you, guys. Today is we had Monday, there was no news. Tuesday, there wasn't too much news except for those yearly revisions. So it came out negative 911,000. So there was a little bit of choppy volatility yesterday. Today we have our first US red folders of the week, and it is our PPI news. So we did a little blog. We'll go over that to help educate you guys on what is PPI. That's the producer price index, and what its implications are to the markets and specifically to the US dollar. So we'll talk all about that this morning. Our channel is a channel about trading, but also about learning about trading. So we like to educate as much as we can so that you can know exactly what to look for when you are trading and not just trade on any candle, so you know exactly what to look for. So maybe we'll develop a little bit of a bias together on what after we read what is producer price index and what we think will be the results. We'll kind of put the pieces of the puzzle together and we'll see how everything moves from there. Okay, so thanks, everyone. Let's get started because we got a busy day today. So we'll be looking at gold, we'll be looking at NASDAQ, we'll be looking at US30, but we kind of have a little system what we do here. First we go over today's news, earnings, then we'll go into a little bit of a blog explaining what is the PPI. Then we'll start doing a top-down analysis. We'll get started with gold. We go into COMEX, which is at 8:20 a.m. Eastern. That's the commodities exchange open. And then 10 minutes later at 8:30 a.m. Eastern, we have our high-impact US PPI news. And then we're going to start to transition over as we get close to 9 a.m. And then we're going to start doing top-down analysis on NASDAQ and Dow Jones going into Wall Street at 9:30. Then I wrap it up just after 10 a.m. That's about 4 hours for us. So I know some of us need a little bit of a break. And then Dave will take over post New York in the live Zoom session and Discord with the rest of the snipers. Okay, and just to heads up that we will be switching up some sessions around here in the next couple weeks, where we're going to do some Tokyo sessions, we'll do some London sessions, some pre-New Yorks, post-New Yorks, and be all around to help everyone around the world, because we know that we got a lot of traders globally. Like, if you guys can share in the chat right now where you guys are from. SST is from London, Ontario, Canada, home of the maple syrup pancakes over here. Where is everyone else from around the world? And you can see how diverse we are. We touch every country around the world. France, Germany, India, yep. Ireland, Spain, Sydney, UK, Kenya, Poland, Libya, South Africa, Chicago. I'll be there, Lavish, next weekend for the Dallas Cowboys Chicago Bears game. So I'll be in Chicago. Portugal, Indonesia, Dubai, Morocco, Australia, Nigeria, Romania, Pakistan, Qatar, Sri Lanka, Iran, Trinidad, South Africa, Kenya, Brunei, lots. We got German in Athens, Greece. Like, there's a lot. We're very diverse over here, okay? So trading is very universal. So we can all learn this language. I might not know how to speak Pakistani, for example, but I know how to speak the language of price action. So we can learn this language by learning what are candlesticks and we can learn the language of trading all together. Okay, guys? So let's get started. Shout outs to everyone from around the world. Thank you, guys. And let's go through the news first. So Forex Factory, you can get, again, I got asked this question on my Instagram. Someone asked me, Ron, should I only use Forex Factory? Is it no? You can use whatever news source you want. There's so many out there. Okay, there's Market Watch, there's Financial Juice, there's Bloomberg, there's Forex Factory, there's anywhere you can get news. But this Forex Factory, it's free. It's pretty basic. It's good for if you're a beginner. If you get a little bit more advanced and a little bit more experience with your trading, maybe you want to upgrade the platform. There is some that you can pay for, and you get more and more in-depth information about the news in the markets, more real-time data and things like that. But again, as a beginner, just start off cheap. You know, you don't need to invest in all this high-tech stuff as you're learning. But as you get more experience and you get more comfortable with the markets, and then you can obviously upgrade if you like. But you see, I use Forex Factory. I don't use any fancy business website right here, so it's good enough. What it's doing is it's highlighting the most important news of the day, right? And I look for specifically U.S. news. So like when I'm going through it right now, I can see Europe had some news. Italian industrial production month over month. In Switzerland, we got some news coming up at 7:45. I'm more concerned about over here when we get into 8:30 a.m. Eastern in North America. We have our two US red folders. Red folders indicates the impact of the folders. So you can see red is high impact expected. You can see this orange folder coming out of Switzerland is medium impact expected. And then you can see this yellow folder in Europe is a low impact. So by the impact of the folders, the more high impact they get, you can expect volatility, okay? So when we see a red folder, high volatility, what's the first thing that comes to our mind? Should be risk management, right? And then when you get these yellow folders, that's when you can utilize a little bit more risk because it's low impact, okay? But regardless what the color of the folder is, yellow, orange, or red, we should always be using proper risk management, okay? So let's all understand that, guys. It doesn't mean that when we have a yellow folder, we start gambling, okay? It means we always use proper risk management regardless of the folder, but more specifically when it is a red high impact, we have to use extreme caution. That's where, that's the proper way of trading, okay? So we do have that today. We can see that. We can see the previous numbers. So core PPI, I'll explain this in a blog, but real quick, core PPI, if you click on the folder here, you can see it's a change in the price of finished goods and services sold by producers, okay? So PPI stands for Producer Price Index. Tomorrow will be CPI. That will be Consumer Price Index. So today we're specifically talking about producers. So core excludes food and energy, okay? So everything excluding food and energy on the producer side. So I'll explain that in a blog. We can see the numbers. Previous month, this is month over month. So remember, it's only released once per month. And then we'll see our next PPI, you can see, will be October 16. So basically a little bit over 1 month from now will be our next release, okay? So today we can see the previous month's PPI was 0.9%. You guys remember? I remember. It was forecast at 0.2 and it actually came in at 0.9. So it almost was 4x, 4.5x higher than the forecast. So it went up to 0.9. So that was previous. Now they forecasted it a little lower. It's lower back to 0.3 over here. So we'll see. Will it be above 0.3? Will it be 0.5? Will it be 0.7? Will it be like last month 0.9? Will it be 1.0? Okay, then that would be good for the US dollar, okay? Or will it come in like lower than 0.3? What happens if it comes in 0.2, 0.1? 0.0, or even negative, then that would possibly be bearish on the US dollar, okay? And then we have another one, PPI month over month. So notice the only difference is it doesn't include the word core. So we know core excludes food and energy. So this one will include food and energy, okay? So there's two readings here. And again, we have, you'll see the previous, from the previous month, 0.9, and the forecast is the same, 0.3. I'll explain this a little bit more in detail in our blog, so just stay with me. Just going to continue going through today's news. After we get through this, then we're going to start moving into Wall Street at 9:30. And then we see at 10 a.m., so after Wall Street market opens, we have some 10 a.m. US news. We have final wholesale inventories month over month. Again, it's low impact. Then we have crude oil inventories at 10:30. These are like weekly inventories that come up every single week on a Wednesday morning. For all of our oil traders out there, I would pay particular attention to this. It directly affects the supply and demand week over week. And later this afternoon, guys, just after 1 p.m., if you are trading, just heads up, we do have a 10-year bond auction in the US. And Thursday we'll have the 30-year bond auction, okay? So these are higher time frame interest rates where there's now analysts are saying 100% chance that US next week during FOMC, Powell is going to cut the interest rates by 0.25%. That's I've seen 99.9 and 100%, all due to those disappointing job numbers that came out. So it's time. Now analysts are saying US has been in a recession for over 1 year, but the numbers have been telling us the true story. That's why I say, guys, sometimes these numbers are all bullshit. You got to look at your real economy. The stock market is not the real economy, okay? This is the stock market. This is where a lot of corporations, institutions, banks are trading, right? Doesn't really reflect the average, your neighbor, right? That's why I always say, guys, go and look at your local economy. Are people struggling? Are people losing their jobs? Are homes selling? Is it a tough time in your neighborhood? Things like that. That shows the real economy. And I've been saying this for years now. You know, even when we had those 2 consecutive negative GDPs, that is a definition of a recession. And they didn't even announce that. Even when we saw the actual numbers coming in with negative GDP quarter over quarter, they still would not say that R word of recession, because they do not want to say that. They want to hold off and never ever say the word recession. They'll do whatever they can to avoid the word recession. But now they're saying, with all of these numbers, US has been in a recession for over 1 year now. And then they're saying, oh, the numbers were kind of all over the place. But, you know, we got to be very careful trading too. When they're releasing all of these numbers too. So our FOMC coming up next week, it's pretty much given that it's going to be an interest rate decrease of 0.25%. Some are even saying it might even be 0.5%. Okay, so guys, this could be one of those events. Have you ever heard buy the rumor, sell the news? So it could be, markets could be moving high and high, and then normally if they do have a rate decrease, the markets will continue to go higher and higher and higher. This might be one of those events where it might be a sell the news event. So even though that the interest rate might get cut next week, the markets could sell off and not continue moving up. So it could be one of those off events. So we have to pay attention how it's going into FOMC. That's for more next week, okay? So just giving heads up on that. So that's why I also look at the 10-year and the 30-year bond auction, because if they're lowering the 30-year and the 10-year, then it's pretty much a given that they're going to lower the 5-year and the 2-year and the lower interest rates, okay? And then the rest of today, if you're trading, there's not much after that 10-year bond auction. We go into market close after our earnings, and then you can see we go into the Tokyo, the Australia, New Zealand, and the futures session, okay? So that's our news today. We'll be talking all about that. And earnings, not much going on in earnings. Before the open today, we got Chewy right now in an hour, 10 limited, Daktronics, and Amber Road. So I don't think any of these are going to really move the S&P 500, NASDAQ, or Dow, so I wouldn't be too concerned about those. Let's look in the after hours today. We have Oxford Industries, Quantum Corporation, Lasaka Technologies. Again, I'm just going through these. Vince Holding. I do not think that these are going to have a big impact on our U.S. markets, so I wouldn't pay particular attention to today's earnings unless you're trading one of these companies, you're a shareholder of one of these companies, or you're looking at their option chain. Okay, so earnings, not much today. There was earnings with yesterday in the after hours that had some moves. If you guys saw GameStop, I believe it's up 10% right now in the pre-market. They had some good earnings. They added some Bitcoin on their balance sheet, and they're up in the pre-market. Okay, so our news today. Trump again, always in the news. I don't think there's a day we can go without Trump tweeting about something. So today, what is he talking about? Trump floats a 100% tariffs on China. Again, talking about this. And India to squeeze Russia. So Trump asked the EU, European Union, to impose similar tariffs while the Supreme Court agrees to fast track his appeal. So Trump is trying, again, with these tariffs. You got to trade careful, proper risk management anytime he's tweeting anything about tariffs, because that's when we get volatility in the markets. U.S. stock futures are mixed as inflation data looms, so that's coming this week. Today we're going to see the producers today, and tomorrow will be the CPI consumer price index. Okay, Oracle stock. So remember after hours yesterday, Oracle reported. So Oracle stock soars after blockbuster AI revenue forecast. So a lot of these tech companies are introducing AI now in their balance sheets and start reporting on these, and earnings are being very bullish. So Oracle, big move yesterday in the after hours as well. Over here, we were talking about this last couple weeks. Trump can't fire right now Fed Governor Lisa Cook for now, judge says. So Trump is trying to fire her. He fired the Bureau of Labor Statistics head boss there, and now he's trying to fire a Fed governor. And he tried to fire Powell. So he's just trying. I think he's on that Celebrity Apprentice show. I think he's back. Remember that show he was on where he was on Celebrity Apprentice, and his famous line was "You're fired" at that table at the end of the show. So I think he's still on Celebrity Apprentice. I still think he's on a reality show and thinks he can just fire anybody at will. Doesn't work like that. I don't know if there's a democracy, it doesn't work like that, but he'll try whatever. So he tries until he can get away with whatever, but he's got other things to worry about right now than firing people. Novo Nordisk to slash 9,000 jobs as competition heats up. So you can see now we're starting to see corporations start slashing jobs. So, when we're not creating new jobs, that's what we saw in NFP and the year-over-year revisions, we're losing jobs. And now if there's high tariffs, there could be a recession looming. This could be not good for not just U.S., but globally for every country, because we trade with the U.S. The U.S. dollar is the global reserve currency currently in the world right now. So if the U.S. dollar starts going down, a lot of countries that have debt with the U.S. or have loaned them money will be in trouble as well. And those are those big nations: China, Japan, South Korea, a lot of G7, G20 countries. Okay, so things could get very interesting in the next few months going into next year. Okay. Barclays lifts S&P 500 target for second time in 3 months. Synopsys stock tumbles after revenue miss. GameStop, GME, was also reporting yesterday in the after hours. You guys remember this big GameStop game stock back in meme stock back in the COVID days. It reports a 22% jump in revenue. Shares rise. NATO's Poland shoots down Russia drones in its airspace. No idea why Russia is flying in Poland's airspace. Who knows what's going on over there. So you can see, guys, lots going on in the markets here. Treasury investors ramp up bullish positions before CPI data. That's tomorrow. And Oracle is in the news. Okay. U.S. labor revision slash job numbers from the past year by 911,000 jobs. So that came out yesterday, those revisions. Okay, so this is what we got going on in the markets. Lots to talk about. Make sure you guys have your coffee because we're going to need a lot of energy today. Now we're going this is our Discord signal trade idea channel over here. We sent out a few signals yesterday. Here's one long on NASDAQ. Looking for a buy at that 23,805, and this is it. There's that 23,805. You don't necessarily just want to take a blind buy. You want to see volume close above, just like we do on these live calls, and then you see it retrace back down. So if you didn't get in that initial push, don't worry. Remember what we always say, there could be another bus that comes and picks you up. You just got to be patient and disciplined. Maybe if you waited for that bus again, right over here, it picked you up, you got in, and then you made yourself approximately 75 pips to the upside, taking out that resistance. Okay, so we'll see if we get any signals coming up this morning. This was the long gold. It's 3,643, running about approximately 100 pips. So let's see how everything is shaping up today. Maybe we can, hopefully we get better volume. Remember yesterday's Wall Street session was really choppy, but then after, like I always say, after you go 10:30, 11 a.m., once they start redistributing that volume, it could be some really nice volume to trade. That's why I want to also showcase and show you guys some post-New York sessions after Wall Street, after everything is said and done, after all the news is released. Sometimes post-New Yorks have amazing volume to trade. Okay, so we want to show you those sessions as well. Okay, and this is our free Telegram channel. It's pinned at the top of the YouTube channel for you guys. This is everything that we do here at SST. So here's our live YouTube link. We kind of put it upcoming, so to let you guys know a day ahead what time we'll be streaming. Guys, thank you to all the comments and everything yesterday's live. It was awesome, guys, so thank you guys so much for that. We do appreciate all of you guys. This is the free blog. I'm going to go over this with us today since we have a lot of time on these calls, but producer price index. So if you want to read this blog too, these are free blogs available, kind of posted the day or before news, so you can learn a little bit about this to know what to expect. And before and after of our trade signals. This was also day post New York, right after me. They got in and they got another 100 pips secured in 10 minutes in the private Zoom. So, you know, we work hard to make sure that you guys are learning and earning with us at SST. Not just myself, not just Dave, but everyone in Discord. Everyone is helping out, contributing, sharing their charts, doing top-down analysis. It's a real trading community, and I want to, hopefully it grows and it grows and it grows, and we can continue helping out everyone around the world. Okay, so thank you to everyone on Zoom and in Discord. You guys know who you are, every day sharing your charts and helping the community. So you guys are just as important as anybody else in this team here. So thank you guys. We do truly appreciate it. And everything we do here, guys, it's all in here. A reminder to those 10 winners that won for the Telegram giveaway. Tomorrow, 7 p.m., we're going to have just a private session, just me and these 10 winners. And we're going to talk about the open, high, low, and close, and the importance of a candlestick. It'll be about 1 hour, 90 minutes. But I'm looking forward to meeting you guys, and you can ask me any kind of questions. So congratulations to you guys. It's going to be awesome tomorrow. And we're going to do more and more and more giveaways and give back to the community as much as possible. Okay. And then, guys, just quickly going over our website, if you need education, because I get on these live YouTube calls and everyone's asking me, Ron, where should I go for education and things like that? Here, SST, your one-stop shop with myself and Dave and everyone else here. You have your courses over here, so you can see courses on Introduction to Forex course. You have courses right here, Introduction to Candlestick course, Price Action is King, what we say here every day. You know, if you need help on course on support and resistance, technical indicator course, strategies, all of these things are here. Long form boot camps. This is a 5-day Forex boot camp. This is a 5-day psychology of trading boot camp, 5-day crypto and Bitcoin boot camp. And then if you need any webinars, long form webinars, they're all in here. Beginner 10 are in here for getting started off. Your next ones, if you get more intermediate, you have another 20 webinars. Then once you get into the advanced level, you have over approximately 100 webinars in here. So can help you out with anything you need trading wise, okay? And then also, guys, if you just scroll over here, under calendars, I don't know if a lot of you guys are using this. I do use this as well. You know, if you come in here, you have your news calendar. You also have your economic calendar. If you come into economic calendar, you can see all of the news. So you can see right here at 7 a.m., US has coming up in 36 minutes, the 30-year mortgage rate, NBA mortgage applications. You can see this one is more in-depth than Forex Factory. This one starts to show, look at, I have at 8 a.m. Brazil. So if I'm trading anything to do in Brazil, if I'm trading the currency over there, I can see that Brazil has their CPI coming out and things like that. US at 8:30, here's the PPI news all over here. You can see at 10 a.m., 10:30, a lot of different folders that we don't see. You know, soft commodities you can trade. You can like gasoline output, crude import output, fuel totals. A lot going on here. Different countries: Argentina, Brazil, Canada, Mexico, USA, Russia. You can see everything around the world. And then there's a filter if you want to eliminate, like maybe you don't trade anything to do with South Korea. You're not too concerned about this. You don't trade like that session, or you can use the filter and you can start to take out whatever you don't need. This is for the G20 countries. So you can see it's all the G20 countries in here reporting all their news, okay? So these are available here under calendars. You got the economic calendar, you got the news calendar, and then when you go to more, you click on blog over here. Here's our free blog available for everybody. So we talked about the BRICS currencies. We talked about why it's not the best to trade on a bank holiday, US bank holiday we had on Labor Day, September. We'll have more coming up in October and November. And then feeler trades, getting your feet wet. Unemployment claims will be tomorrow, Thursday. So get to know what these are, guys. Here's producer price index. So I just want to go over this with everybody just to make sure everyone understands this before we get the result, get the actual numbers. So PPI, let's all just get in the habit of knowing what these abbreviations stands for. Producer Price Index. Tomorrow will be CPI. That will be Consumer Price Index. So they target different, this is the producers, tomorrow will be the consumers, okay? So US core, PPI versus PPI. Remember what I told you, the word core. You're going to see the word core in a lot of news events, okay? So core excludes something. The producer price index, PPI, measures the average change over time in the selling prices received by domestic producers for their output. It's a key indicator of inflation at the wholesale level, as it reflects changes in the cost to produce goods and services before they reach the consumers, okay? So this is important regarding producer pricing, about the output and before they give it to the consumers. So it gives us a good gauge of inflation before we start paying for these things, okay? PPI definition, the PPI includes prices from all sectors of the economy, such as manufacturing, commodity-based industries, agriculture, okay? Example, if a factory producing steel experiences a rise in production costs due to increased raw material prices, this would be reflected in the PPI. So just thinking back, there's been a lot of tariffs affecting the manufacturing sector, especially with steel. We were talking about steel. Trump placed 100% tariffs on steel. So now we're going to start to see the actual numbers coming in. You know, when you place tariffs, it might take 1 month, it might take 2 months before we start seeing the actual results. You know, when you start cutting jobs and it might take 1 month or 2 months before we start seeing those actual numbers of the job numbers getting affected. So that's why we're starting to see all the actual numbers now. So this is where you got to be very careful when you're trading, because now we're getting real numbers coming in from when the tariffs were implemented, okay? So this directly will be impacted by the tariffs, especially in the manufacturing industry. So number two, then we have, that's the regular PPI, then we have the core PPI. So the core PPI excludes food and energy, okay? It's highlighted, excluding food and energy. Prices, because these are typically more volatile and can distort the underlying trend, okay? So most traders look at the regular PPI, which includes everything, to get a good number. But then there's others that look at this one that excludes food and energy because it could distort the actual underlying trend. So example, if energy prices spike due to geopolitical tensions, this will affect the headline PPI, but not the core PPI, which seeks to provide a clearer picture of underlying inflation trends by excluding such volatile components, okay? And then there's a link here. If you click on it, it'll take you directly to Forex Factory and to the PPI news, okay? Impact on the markets. So inflation expectations. Both PPI and core PPI are closely watched for indicators of inflationary pressures in the economy. Higher than expected PPI figures can suggest rising inflation, potentially leading central banks to increase interest rates. So right now, I was just talking about Powell. It's like baked in, 100% analysts are saying that he's going to lower the interest rates next week during FOMC. Okay, so just reading this, higher than expected PPI figures can suggest rising inflation, potentially leading central banks to increase interest rates. So this is interesting. So we got to see, maybe Powell will pivot. If this comes in higher than expected, maybe Powell will say, we were right about to decrease these interest rates, but looking at PPI and CPI and this and that, and maybe we got to keep rates where they are or possibly increase. I don't think they're going to increase, okay? Not with the state of the economy that the U.S. is going through right now. I don't think raising interest rates will help them out right now. That would probably be the worst thing you could do currently. So interest rates too. What impact will it have on interest rates? If the Federal Reserve anticipates sustained inflation, it might tighten monetary policy by raising interest rates, impacting bond yields and borrowing costs. Yeah, Reese, that's not good. Stagflation is on the way. Guys, if you understand like just basic economics, there's inflation, stagflation, deflation. Stagflation is probably the worst thing that you could do to your local economy. Stagflation is not good. So equity markets, what impact will this have on the equity markets? This is the stock market over here. Rising interest rates can lead to reduced corporate profits and lower valuations for stocks, causing potential market sell-offs. Okay, that's what I was saying. Maybe going into next week's FOMC could be buy the rumor, sell the news event, even if they do decrease the interest rates. So that's why we always got to be forward thinking, guys. Think about this. They could be pushing the markets to the highest points, and then they'll lower the rates. Normally we should see it go higher, but it's already like at all-time highs. And then it's a perfect time for them to sell, profit take, and lower the markets. But even when you're at all-time highs and you do sell it off, it's not like a market crash. It's just a correction. It's a pullback. And then after maybe a week of consolidation, it might continue to go back up to those all-time highs. So that's what we got to kind of put the pieces of the puzzle day by day together until we get to that FOMC event, okay? Forex markets. A lot of you guys, we trade Forex. Expecting a rate hike based on inflation data can strengthen the US dollar, affecting currency pairs that are correlated with the US dollar. Also, us that trade gold is correlated with the US dollar. So we have to watch this, okay? Why traders should learn about these announcements. There's some traders that don't even look at news. I'll be honest. I used to be that guy. Back in the day when I was just trading, I had no idea about news. I didn't care about news. I just wanted to make money, but give me a security and let me trade it. I didn't care for high impact news. I wasn't looking at this. No idea about fundamentals or economic folders or nothing. And you can probably guess I lost a lot of money because I was trading a high impact news event, had no idea 8:30 had news, and I'm in a buy, and then all of a sudden it just dumps a big red candle and I blew up my account and I had no idea what happened. So welcome to the world of learning all about the markets, okay? So that's why it's not just technicals, not just fundamentals. There's so much to do learning trading. You got to learn how to control your emotions, your risk management. You got to learn just every day what to do when you're in a trade, what to do when you have a losing day. So it's not just about do you know your folders and do you know a candlestick? No, there's so much more that goes into trading. That's why you got to be well-rounded. You got to be well-rounded in all aspects of trading. Okay, what else can affect this? Why traders learn about these announcements? Volatility. Okay, we always say this word volatility, but why do we actually care about this? Economic indicators like PPI can cause significant market volatility. Understanding these metrics helps traders anticipate potential price swings. So this is when you got to start thinking. If you're going to trade the news, high impact news, are you going to leverage a lot? Are you going to under leverage? Are you going to lower your sizing? Are you going to use more feeler trades throughout the news and then see what happens and trade after the fact? So this is where you got to start thinking about this. You don't come up with a plan right when they release the news. You got to start now thinking, what pair are you trading? How will it be affected by this news? How much risk will you be using? Things like that. So this is all personal. Everyone is different, right? But you got to come up with your own plan. Trend identification. Recognizing inflation trends enables traders to make informed decisions, whether speculating on interest rate moves or adjusting portfolios to hedge against inflation. Strategic planning. Knowledge of PPI allows traders to plan entry and exit points around expected data releases, optimizing trade timing. So a few tips for trading PPI announcements. Know your schedule, number one. Be aware when PPI data is released, today at 8:30. Typically once a month, and mark these dates on your trading calendar. So we saw the next PPI will be October 16. I can mark that on my calendar so that I know when it is and how the markets are trading into it going in maybe that possible week, okay? Set alerts, right? Use economic calendars to receive alerts ahead of PPI announcements to prepare for potential market movements. Risk management. Employ stop loss orders to protect against unexpected volatility. Pre-announcement analysis. Analyze consensus forecasts and previous PPI trends to gauge market expectations. So when I'm saying like pre-announcement analysis, you see how I'm saying analysts are saying for the next FOMC, about 100% of them are saying it's going to be a quarter 25 basis point rate cut. So that's pre-announcement. So that's what I'm looking for, like going into FOMC and things like that. Stay informed. Follow your central bank communications, as officials often discuss inflation indicators like PPI in their assessments of economic conditions. Watch correlated markets. Keep an eye on related markets such as commodities and treasury bonds. Today, this afternoon, is the 10-year US bond auction at 1 p.m., which may react sharply to PPI data. Okay, you notice how everything is strategically. Look at all the news. Today, we have PPI. 1 p.m. we have 10-year bond auction. Tomorrow we have CPI. At 1 p.m. tomorrow we have 30-year bond auction. And this is all coming after NFP, leading into FOMC. You see how when you pull one string, it will move the other string and everything is tied together. So it's not just by a specific reason why everything happens like this. It is for a specific reason. So if you start learning a little bit more about this, you're just going to make yourself that much better of a trader, okay? And I'm not saying you're going to learn all of this overnight. It does take time, right? But just start. Just knowing what PPI is. Some of you guys have no idea what PPI even stands for. So you learn something today, it's about the producers. Tomorrow's CPI about you and I, the consumers, right? But these are the producers, the manufacturers who sell us products. If it costs them a lot of money, then what do you think is going to happen on our end when they sell it to us? We're going to have to pay a lot for it too. So you can see how this measures inflation. Avoid over leveraging. Okay, this should not just be for high impact news. This should be every day, guys. Like, you can use leverage, but it can kill you. It could be a two-edged sword. You could use leverage to your advantage if you understand how to use it, if you're an experienced trader. But if you're a beginner, don't over leverage because it will destroy you. Like, if you don't even know how to trade, how do you think you're going to trade with 100 times leverage? You'll probably get destroyed, okay? Given the potential for rapid market movements, avoid excessive leverage, which could amplify your losses, okay? So, and then this is little advantages and limitations on what it is, okay? So by understanding the nuances between PPI and core PPI, traders can better navigate the complexities of market reactions to economic data, aligning their strategies to capitalize on opportunities while managing risks effectively, okay? And so that's a free blog, guys, available for everybody. You can click on it, read it, and learn about it. If I have time later this evening, I'll do one on CPI because we got CPI tomorrow. So we'll learn a little bit about the opposite one, the consumer one, okay? So guys, I apologize. You know, sometimes when I get into that, we do so well, like we got a lot of viewers. Then as soon as I open economic folders, we lose all of our viewers. You know what I mean? So I do appreciate you guys that are still here and wanting to learn. And it's not just about a buy, sell signal. You guys are actually here to learn. So I just want to say thank you guys. We do appreciate you guys. I hope you guys are learning. You know, I could have just started this call and got right into charting, and you know, it could have grown a little bit more. We could have got more subs and things like that, but we're more concerned about you guys learning, okay? So I appreciate you guys, everyone that's here still and wants to learn. Thank you guys. We almost have 300 viewers. So if you guys would kindly hit the like button, if you guys learned a little bit something about PPI, and if we can start, if you're new here, subscribe to the channel. Let's try and get this to 80. Like, what would be a psychological number? If we were trading right now, let's say this was an index and SST index was trading at 84,665. What do you think my target would be for to take profit, for example? What do you think my psychological level would be? Who knows what I would be looking at for resistance just by these numbers? Let's see. And this will help us understand psychological levels in trading. Gwendolyn, 88,700. Good. I would be looking at 750. 700 is a good one, but 750. Remember those numbers? 250, 500, 750, 1,000. Or 25, 50, 75, 100. So 750, guys. Let's see if we can target 750 subs today at 84,750. That will be our goal today, okay? So it's like when we have our take profit, that would be our daily goal, okay? So this is our daily sub goal. So we can utilize a little bit of this analogies to help us out, okay? And the big one, the all-time high one, if we're at around 84, 85,000, I would be saying, guys, you know, that 100,000, that would be that big one, okay, guys? So here's gold on the 5 minutes. You can see it was consolidating, coiling up right over here. Look at these candles going into 5 a.m. and then they redistributed it out at 5:30. You know, it came up here, it pulled back into about 50% of this candle, still holding and continuing to drive for highs. I don't even need to look at my really silly indicator, the RSI indicator. I guarantee you, just looking at this, I can see it is in a rally coming up, small pullback, new high, pullback, consolidating, didn't break down, continue to go high, pull back, continue to go high. I bet you the RSI indicator is showing us that it is overbought right now. So let's look at it. There it is. So you see when we peaked up there, the RSI indicator is at 81. There was that brief little pullback and that cooled the RSI down to here, 65, but you see it's still in this overbought territory above 70 and it is still driving up. So you got to be careful with this type of indicator, okay? Because it is kind of deceiving, okay? We got to look more for structure, okay? So gold is moving bullish right now in the 5 minutes. But what we're going to do is we're going to start doing a top-down analysis and break this down from the daily to the 4-hour, hourly, and then finally get it down to the 5 minutes, okay? So if you guys are ready, make sure you got a hot coffee. Make sure you got something. I got my coffee. Cheers to Tim Hortons. If Tim Hortons, anyone out there, we would love a sponsor from Tim Hortons to give us coffee every day and some Timbits. Right now, they're not sponsoring us. They don't want anything to do with financials. But we could trade Tim Hortons, guys. You know, if we don't get the sponsor soon, I'm going to start shorting the company. No, I'm just joking. Welcome everyone on Zoom. Thank you guys for joining. Red Clues, welcome. Forex Borex, good morning, Brandon. Everyone, shout out to Forex Borex. Justin, thank you for joining. Welcome, Christoph. Thank you guys for joining. Taylor, welcome. Okay, yeah, sorry. Taylor from the UK. Borex here from Ireland, Spain. Ferdinand, welcome. Sydney. Christoph, German in Athens. Tikanis, welcome. Conrad, Daniela, good morning. Welcome, guys. Thank you guys for joining. Welcome. Danny, yes, Albania won against Latvia. 1-0 yesterday. Great game. So hopefully we can qualify in those World Cup qualifying. And then maybe I can go watch a game. It is World Cup in North America. Canada, US, and Mexico will be hosting it next year. Okay, guys, so let's get started. Everyone on YouTube, thank you guys for joining as well. Starting from the top, all the way from the top. Welcome, guys. Sleepy Boy, first one to come here. Hopefully you're awake now. You're not sleeping. Nothing happened. Welcome. Thank you, guys. DB, welcome. Anthony, thank you for joining, brother. Justin, welcome. Justin, is this you in Zoom and YouTube? Thank you, bro, for joining on both. We appreciate the support. Franco, welcome. Pauline, good morning. Welcome, guys. Thank you. Daniel, everyone. Guys, I can't go through everyone because there's a lot of you guys, but shout outs to everyone. You know, I give the shout outs to whoever's here. For early bird gets the worm, but I give everybody shout outs. So thank you guys, everyone, for joining. Appreciate you guys. Let's get on now gold on the daily. Okay, so I'm now switching over onto the daily and look at the daily. Holy shit. Okay, like it's unstoppable right now. Like every single dip is getting bought up and continue new all-time high. A small pullback, new all-time high. Yesterday it opened, created that all-time high, came down. It was a shooting star candle. Like you can see how these things can be deceiving. Like look at yesterday. We'll start dissecting, but look at yesterday. It came down, closed right at the lowest point, and we just opened and there was just a brief little push, and then look at gold coming right back up. Will it fill this entire wick and continue to go? Remember yesterday, that psychological number, 3,675. So that's why I mean, guys, that's why I was practicing with you guys. 750, you know, these are psychological numbers, okay? So if it continues to fill up to 675, it may have a potential to go to 3,700. Nice psychological number up there, okay? Sometimes when that you got to use psychological numbers when we're in price discovery, when we've never traded in this area. This is all-time high territory, okay? And look at it, the squeeze it's causing on short sellers. Man, if you're shorting gold at all-time highs, you have to be very careful, okay? That's why I say use proper risk management, because if you over leverage, you can say goodnight to your account, okay? So, key critical points of interest we've been talking about for months and months and months and months. We can continue to talk about them. Remember this one. Previous all-time high right here on April 22nd. We hit what number? Exactly 3,500. So, I was always placing an orange line at this all-time high. Now you can see going across the chart, volume is above it, and now it turned from resistance, it turns now to support. You can see 3,500 is still here in the market, and we're trading all the way up here. We have not retraced all the way back to even retest this. We came very, very close right there on the third day when we broke out. The first day, the second day, the third day right there. It came as low as 3,510. So it missed coming in here by $10, which is 100 pips. So maybe in the future, it will come in here and bounce off, okay? We don't need to entertain that right now because we're trading all the way up here, but this is just for learning purposes right now, okay? And then if you want to draw yourself a zone, you could do, remember I gave you two options yesterday, so I don't want to keep going through this. So that's why if you guys tune in on our call, you guys are going to learn. You remember option one, you can go from the open of this candle to the close, figure out your 50% point of control, and draw your box across. Or you can do it this system. This is one you guys are maybe more familiar with, you know, your fair value gaps. You see this wick and that wick, and then you see that chunk of that blue volume inside hasn't been traded. This is pretty easy to see. See what I just did there? From that pullback wick, it stopped right there at 35.10, and then the wick before, this candle before, the one that closed above, the highest point was 34.90. Okay, so there's a $20 zone in there from 90 to 10. $20 zone, 200 pip zone. And you see it hasn't been traded into, so that's a fair value gap you can stretch into the future. Again, if it ever does come back in there, in somewhere in that zone, maybe it will come in here and bounce out of there because it now will trigger all of those pending orders. Once it activates them, it's got a high probability to continue to go to the upside, okay? So that's how you can learn how to figure out those, okay? That I gave you those options yesterday, okay? You can either do it with the Fibonacci or you can do it by examining the wick and the wick, okay? And then you can go back into the future and, you know, you can start to, do some back testing and things like that, okay? So that zone is above us. Remember this all-time high supply zone. We don't even need to continue to chart this anymore because we've moved out of this area, and you can see we're up here now. So what we got to start concentrating on is where we are right now, okay? So we're going to base off of, okay, we're still above this candle right here. Which day was this? Monday. It's Monday, start of the week. That's why I'm looking at this. How do we start the week? So again, I want to find 50%. I could literally just cut this in half right there, okay? And place my yellow point of interest right there at halfway point, and I can see we still have not traded in here. But when I'm doing a top-down analysis, I don't want to be guessing, okay? I want to be as accurate as possible because I'm going to go down to the lowest time frames, 5 minutes, 1 minute. So I want this to be accurate. I don't want to just speed up my top-down analysis. I want to take my time doing this, and then I can trade off of it all week, all month, okay? So I'll do it my way. I'll show you this way now. So from when we open this week, there's the opening price, right? Right there, there's the opening. That's why we're going to do tomorrow's webinar. That's night class with those 10 winners on open, high, low, close to get to know all about this. So you see where I placed my yellow line, where I cut it in half? I'm exactly right at 0.5. So sometimes just eyeballing it, you can get really good at this. I eyeball it and I got really good because I trade 1 minute candles. 1 minute candles are very, very fast. Sometimes I don't have the luxury of pulling out my Fibonacci tool and placing it, plotting it, because before I do that, the candle's closed and another 1 minute candle is opening. So I've learned to do this very fast by eyeballing where's 50%. I kind of go a little bit above and a little bit below to determine where my zone is. But with the Fibonacci, you can know exactly where it is. There's the 618 or the 382. Those are your two numbers. Depending if you have them reversed, it doesn't matter, okay? You're always going to be locating the 382 or the 618 respectively. Doesn't matter which one, okay? Because we're just figuring out the zone. So there, I've got my zone now. I can get rid of my fib tool. I've determined the zone. Now, I got to get in the habit of stretching it into the future, okay? Someone asked me, why do I do that? It's because this is a static zone, right? This is a block in the market. It's pending. So it'll only get activated until the volume will come back in there again and transact in here. I don't know if it's going to come in here today, tomorrow, next week, next month, or next year, right? So, but what I can do is I can now place an alert and wait for it here patiently. I can add an alert, and when it comes in here, it will give me an alert that it's in here. That doesn't mean, again, I just go in blind and just hope for the best. I watch what's happening in here because this zone could get inverted, right? Where we think it's coming down in here and it has a high probability of triggering these buy orders and then bouncing right back out of there. That could happen. That's what we look for. But I've also seen where there was news, high impact news, and it was a big bearish day and it's cutting right through here like a knife cutting through butter, and it cuts right through there and just cut right through all those pending orders, activated them all, but it's such bearish pressure that it closed below that zone, and then I flipped the zone red to show that it's an inverted bearish fair value gap. And then it comes back in here, more sellers, more offers, and then now it's starting to turn into a bearish trend, right? So the box won't change. The box is the same. The only thing will dictate is that the volume comes in and gets respected and moves out, or it closes below. And then if it closes below, all I do is change the color of the zone to red to illustrate that it's an inverted block of showing sellers, and then it could come in and then push right back down. Now we're in a bearish trend coming down, okay? So we don't need to worry about that right now, but that's just for education purposes because I do this on the 5 minutes. So just so you know, if I have a zone and I switch the color, that's what I'm doing, okay? So right now it's still green, showing green meaning buyers, green meaning support, and green meaning demand, okay? You guys understand that? So don't worry so much. Don't get too caught up on the words. Just understand what the zone represents. So I'm trying to tell you guys, this zone represents buyers. You can call them buyers. You can call them bulls. You can call them support. You can call it demand, okay? Are we clear on that? You can call it whatever you want. You can call this Mickey Mouse if you want. Call it Mickey Mouse. I don't care what you call it, okay? You can call it the Pancake Factory, okay? Maybe there, or you remember when we were going fishing? There could be some fish in here. This could be like your pond, where there's some fish swimming in there, right? This was a good analogy yesterday because I know a lot of you guys go fishing. I know Jay fishes in Lake Erie where I fish too. So this is the fish finder. We got some fish swimming in there, okay? All we got to do is we got to come in here and maybe hook one of these guys, and then we got to reel them back up to the boat, right? Okay? And then below here, there might be like liquidity. This could be where the bigger fish are down in here. This could be the big guy. So there's more bigger fish down here. So the market might come down, grab the liquidity, grab that big guy and take him up, and then grab the rest of those fish. And then you got that. And that's that fake out right there. Okay. So you guys can tell Ron smoked a joint today, because when Ron is playing games like this with the fish, and you know he smoked something. Okay. So we'll keep those there. We'll keep the fish in there. They're in there. You know, they're just swimming around in here. They're not going anywhere. They're there, right? And then, but sometimes they're going to go deeper. They're going to go deeper, and then they go deeper into the depth of market. And then, but we can catch these at a later time, okay? But right now, they could be floating around in there, okay? These are nice pickerel, walleye, also you can call them, okay? Now, let's start dissecting yesterday. Yesterday was a crazy, crazy day on gold, okay? So look at where we closed on Monday. Okay, we made a high, all-time high, then we closed right there. So let's look at closing and opening price. Okay, look at right there. That's where we closed. That's where we opened. Yesterday was very bullish. It was a bullish ignited open. It opened and it went bullish. These are buyers asking to trade at all-time highs. You know, and look at, they took out Monday's high. So that's a weekly high. They took out Monday's high. I'm going to place a line of reference, point of interest. You see I have a yellow line at the opening price, and I have a line at weekly high. I can see yesterday they blew right through that, okay? So it was pushing. Remember there was some news about Israel in Qatar and things like that. So maybe that's what caused gold to spike up, okay? And it pushed, and then it stopped up there, okay? So now we can recognize our all-time high, new all-time high. I'm going to place it orange to represent Donald Trump's makeup face. So there's Donald Trump's face at a nice psychological number, 3,675, and you can see it got rejected. It's a massive rejection, okay? This is like basically they pinned it. You know when I say they pinned it? They pinned it up there, okay? And then then it was just selling pressure, offers, pushing it down. We came back to the weekly high. You know where it's resistance here? Did it find support there? No, it didn't. It continued to go down. The sellers pushed it down back to the opening price, opening balance. Were the buyers there to, you know, push it back up and close blue? No. Look how strong the sellers were yesterday. It closed as a bear shooting star. Normally when I'm scalping, I'm in on the next candle, and if it moves down bearish, I'm already in a sell, because I always say, guys, look, they just pinned it. It's a shooting star. Maybe the momentum will continue selling off. But we were close to where these fish were, and it came down, you know, but the fish didn't jump out of the water, right? The fish can't jump out of the water, and so it's got to literally come down there and hook them. So it didn't come down. I can see now where we closed, okay? So look at where we closed yesterday. Again, point of interest right there. Look at how we opened today. So it started ignited bearish, possibly like right minutes when the market candle opened. We'll take a look at this. Could be just right after 6 p.m. It opened, you know, just kind of sucked in. That's why I don't trade at this time when markets open. I don't like that time because they play too many games like this. And then it came down. Sellers could have got in, and then look what they did. They reversed it right back up to the opening price. And look at now. Now we're moving back up bullish. So right here is a flag. You know when I say, guys, it takes 2 or 3 bodies, and you can see the volume. See this yellow line and this yellow line? How I have it trapped in here? Blue, black, and blue. Right here. This is a consolidated flag. If you were to just consolidate that, I'll show you. Neutral. Right there. You see that blue body, the black body, and this blue body. Okay, so you could stretch that into the future. That's a consolidated zone, or it could still be a bull flag. So you could make this zone literally green as well. But but we could rely more on the depth of market right in there, okay? But if this is also a zone, and you can see it's a 3-bar play breaking out. So, but look at the wick that they still got to fill today, okay? So we have a beautiful bullish candle. So it came right back up, broke out, filled, it got back up to taking out the previous week high Monday, and look at us driving right now, okay? So we opened, we came down, lowest point is right there. I'm placing a purple line at our lowest point of the day, and you see how it's just above where our fish are, okay? So it did not come in here and grab this volume. It didn't need it. It looks like it's got enough, and it's continuing to push and push and push. We are basically at the highest point right now, okay? And remember, we're going into COMEX in another hour, and then we have our news in 90 minutes, okay? So it's coming right up. Will it continue to fill this all-time wick? Guess what I'm gonna do, guys? Some of you guys are well ahead of me, so you guys are perfect. You guys are learning. So what I'm gonna do is, will this candle continue to drive and drive and drive and drive and drive and fill that and then go to a new all-time high? Possibly, it could. But what about if it comes through here and makes a lower high? Then the sellers are protecting this all-time high. Where do you think is going to be that ceiling? Where do you think is going to be that resistance? Where do you think I'm going to place a line? Okay, psychological level. I can literally guess from this purple line to this yellow line. I can place a line halfway, right at the 50% point. This is me guessing, right? Okay, that's me guessing that this is exactly 50% from this purple line to this orange line, right? I don't need to guess. Let's grab the Fibonacci and let's be as accurate as possible. Purple line to that orange line. See right there where I was guessing? I am perfectly right on it, right there. So that could be, if it continues to drive today back up bullish, it might find resistance right there and get rejected back down, okay? And then I know that then the all-time high sellers are protecting this block up here. So I can even make a block from the orange line to the red line. I can start to make this red, like showing me that if we do come in here, I expect sellers to be here and push this down. It could come like this and do a double top in a few days, and then the market is starting to come back down to hook this fish right here and then maybe go back up, right? So that's just my bias. Okay, again, a bias is just a bias until it punches you in the face. You know, like Mike Tyson said, you have a plan until it punches you in the face. So, you know, this is just my bias, that's my plan. I'm just going to utilize that and watch. If it comes in there, I'm going to see if the sellers are there to push it down. If the buyers prove to me, if they can prove me otherwise, like if it comes in there and they're continuing to drive in there, maybe it pulls back and then it continues to go through there, okay, the buyers are strong. They prove to me. And maybe they close it above there. We've got a new all-time high and we're ready to drive. Then guess what I'm doing with that zone? I'm going to stretch that zone into the future, and I'm just changing it the color green to illustrate that it could be now a buyer's zone, or these fish are now coming in here now, right? So they're coming in here. Okay, so that's the way how I look at the market right now. Sometimes you guys ask me my bias, my opinion. That's my opinion. That's my bias, right? So I'm going to keep it how I stated it and continue to watch how the news will impact it. Will it come in here? Will it get rejected? Things like that, okay? So, but right now, it's still a very bullish daily candle. We cannot forget about yesterday's rejection, but we're filling it up. But that's a big wick to fill. That's a big job for the gold buyers to do. You know, it's not a short wick where you pop and you drive. That's a backfilling wick. You got to backfill that. By the time this volume backfills it, it could get exhausted, and then a big seller here could come in and start offering and push it right back down, okay? But that's a very strong candle. Again, psychological numbers. If we break out of 3675, where could we go? It all depends on your time frame, how you trade. If you're like a more of an intraday trader, 15-minute or 5-minute scalper, go $5 increments. Go from 75, go to 80, 85, 90, 95, finally 3700. That's more for scalpers, intraday traders. If you're more an hourly trader, maybe go like $10 moves. Go from 75 to 85. 90 is a better one. It's a nice whole number, and then go to your 3700. But for the bigger like 4-hour or daily traders or just overall, 3,700 is a nice psychological number. Make sure you have a line at 3,700 if it gets up there. Remember I told you the other day like 3,650. Remember this day I told you 3,600. Look at the highest point was 3,600 exactly. So I'm doing the same thing with the 3,700. Next one could be 3,750 or 3,725, all depending on what time frame trader you are or what you're looking for. So right now, very, very, very bullish. Okay, I know RSI is telling us on the daily it's overbought, and it keeps going higher and higher and higher. Like you don't want to be selling, okay, against this trend right now. You want to be either buying pullbacks or selling at the highest of high points, okay? But now let's break the daily into 4-hour, okay? And it's 7 a.m. It's just after 7 a.m. So we have a new hourly candle in the market as well. So if you are trading, there's a new hourly candle that just opened. Look at the 4-hour candles, okay? So 4 hours are making a trend. What trend is this? Obvious. Hopefully everyone can say it's an uptrend. If anyone says that this is a bear trend, then we gotta get you watching one of our support, resistance, and trend webinars. This is clearly in an uptrend. It's rallying up, okay, right there. It pulled back. That didn't crash the market, just a pullback. Continued to find support, higher low, and it continued to drive up to here. Found resistance, found a pivot. It came back down. Those were 4, 8, 12 hours, but it came back down to a demand zone where those fish are. It didn't crash. It continued with a higher low and moved for a new higher high. Pull back again, higher low, drive again, new all-time high. Okay, so those 4-hour candles that came down right there didn't really crash the market. You know, it just came down right there, made the lowest point of the day, and now we're coming right back up. But now we got here, so is it going to come up, you know, to that red box and do a double top and come down? Or right now, you know, where I said that they at the daily high, it could be like a lower high right there, and they're ready now to start pushing the market back down. Okay, if there's the news correlated with this, we could get that leg coming back down. However, it could continue to move back up into that red zone and test the all-time high up there, okay? So right now, looking at the 4-hour candles, we are clearly in an uptrend, but we now have a little bit of structure now, okay? So let's look. These 4-hour candles came in. When did they pin it? It was yesterday at 10 a.m. This 10 a.m. to candle, which closes at 2 p.m., kind of brought the market down. Okay, we had another one which closed the market from 2 p.m. to 6 p.m. Now I can see, remember when we opened right there, I told you it was a short-lived wick. I didn't even see, but I could just tell the way how it opened. It just came down briefly right there, made the lowest point of the day. Watch when we go to lower time frames, we'll see maybe it was like 5 minutes. It came down there and went right back up. Then the 4-hour candle came all the way back up there, got rejected, closed with a little bit of bullish volume. Next one, again, opened, no pullback into 50%, small pullback, continue to backfill that wick, create a new higher high, close above, engulfed. So these two bars engulfed that 4-hour one, and we continued, you know, off of the 4-hour close. There's your point of interest on the 4-hour pullback. We're still above 50%. It came back to the opening point, low wick, so it's got a little bit to fill. Then that volume continues to redistribute to the upside. So we just got up right there. Now I can see we hit the daily high, and now we could possibly come down. So on the hourly, one thing I want to look at is this is a big candle. This is representing Europe, the European market exchange, okay, everything from 2 to 6 a.m. So that's pre-London, that's London, that's Swiss markets, that's Frankfurt, German markets. Everything to do with Europe is basically right there. It's kind of like our candle from 6 a.m. when pre-New York and COMEX and Wall Street from 6 to 10. This is Europe's like basic 6 to 10 New York candle. This one is very important, this 4-hour candle from 2 to 6. So now I can now maybe find 50% of point of control. That's a big bullish candle. Let's do what we normally do on everything. I want to show you on different time frames how we do the same stuff. So that 4-hour candle coming from Europe, can I find exactly where's 50%? I can. There's the 0.5. For 4-hour or hourly, anytime I'm on the H time frame, I use a white line, okay? So I'll make it like a legend, a grid system so you guys know, but anything, okay, when I'm doing purple, you know that I only have two purple lines on my chart. One is representing the highest point of the day. The other one is representing the lowest point of the day. Those don't change, okay? Any yellow lines are daily points of interest. They could be where bodies open and close, or they could be specific highs and lows on certain days that I'm looking at, okay? And then if you see a white line, it's representing either a 1H, a 2H, a 4H, whatever hourly I'm on, okay? So you can see right there, it's still above. Did I do my bullish zone? I didn't. So let's go back up with the Fibonacci, learn how to do this. And remember, it's either the 618 or the 382, whatever, how you have your fib set, or if it's on reverse, doesn't matter. I'm not really using the Fibonacci for that. I'm just looking exactly where's the zone, okay? And then I make it green to represent buyers are still possibly here from London, holding gold price up. Now I can see when we hit the highest point of the day, it came down bearish, bearish, bearish. See how we came in a little bit in there, and it's got a wick right now, but there's still this bearish volume that could continue to come in here and go deeper in there. This candle is not closing in for the next 3 hours, okay? So I'm not going to sit and wait and watch this candle for this entire session. We could, if you guys want, well, you know, when we do a 4-hour session from 6 to 10, we could literally watch a 4-hour candle and just watch it, see what it does, okay? That's not necessarily what we want to do, because everyone will fall asleep and go to lower time frames. So you can see that it's still technically holding. We can stretch that into the future just to be a little bit safer. See how I'm so close to my yellow daily point of interest down there? Maybe I'll pull this green box and manipulate it myself and bring it down to that yellow line, okay? So this could be an inversion zone, right? You can see how it's still holding, maybe to take us back up to the daily high and push back out of here. But if this 4-hour candle, if the sellers cut through here and close it below, we invert that, might be red, and then might push us back down to this yellow line. Could come down there. Remember, that's that consolidated zone that I showed you on the daily, and maybe it will come back down to that yellow line, possibly to the lowest point of the day, or to pick up these fish swimming in here, okay? We don't need to entertain this as of yet because we're still respecting the green box, and look at how it's coming right back up. So this 4-hour candle could come back to the opening price, small wick, flip it, and then continue to fill and drive through here, okay? And then for our small time scalpers like myself on the 5 minutes, on the 1 minutes, what I do as a scalper, okay, so I'm not going to do this on a chart, but I'll show you guys what I do. You know, if it's breaking this daily high, yes, if I go on a buy, I want it to come all the way back up to this yellow line and go to all-time high, but sometimes it doesn't do that, right? So as a scalper, again, I just cut this zone in half. From the purple to this line, I could just go and trade it right up to there, right? And then I measure the move, so I know exactly when I'm scalping what I'm looking for. Even if I just take like a daily high break, that move up to there is 40 pips, right up to there. And it's coming to 50% right there. And then those sellers could be right there, and then they push it right back down. But me as a scalper, that's a good move. Just come right up there, grab my money or go to break even, and then I watch what happens. If it closes above that red line, then maybe it will close above. Maybe it will push right up there, okay? Maybe it will get rejected a little bit. Maybe it will come back down. Maybe it will build. And then that red line becomes the support line to take me to my next area. And then grab another 40 pips. So that's how I trade. I trade through the bigger areas, but I also mark smaller zones as well for scalp purposes, okay? So I'll leave that red line on there. That half horizontal line is what I use for the lower time frames, okay? So now let's move from the 4H to the 1H, okay? So this is our 1-hour candles. Remember yesterday when we were trading, there was that big bullish push at Wall Street. Then it made the high, and then look at 10 a.m. They came right back down and they closed it below. There's your zone. If you flipped it, it continued to push down, came back, wow, and still below that zone and came all the way down. Double bottom at that daily point of interest and continue to close above, good retest. And now we're coming right back up. We had some spin top candles at 1 a.m., 2 a.m. London was spin top. There's 4 a.m. Big volume at 5 a.m. push us out of here. And now I can see we hit the daily high during pre-New York Open, 6 a.m. And then came back down, closed right there. Again, we got another bearish candle that came all the way down into that green zone and coming right back up. So we are consolidating right here. So yes, definitely we can make a new daily high and drive through here, or sellers could continue to try and push it down in here. So right now it's still holding. This is where we are consolidating between the highest point of the day and this 4-hour point of control. So if you consolidate it, there's our hourly volume. This is all we're trading in right now, okay? So if I measure that entire zone and I want to trade in here, I know from the top of the green box to basically the purple line, it's about 60 pips. So that's the zone we're trading in. So if you're trading, if you buy off the bottom and you get 30, 40 pips, you're doing great. Like you should be either going to break even, should be scaling out, but it looks like 50, 60 pips is the maximum currently. Even if you're selling and you're coming down and you're going down with that candle and you're making 30, 40, 50 pips on the way down, you got to be doing something, because if you don't, it comes right back up, right? So that's our hourly consolidated zone. So what I'm looking at on the hourly is we made this big push. Consider that one top. I know there's a double bottom there, but look at that as just one bottom, a neckline, came back up, and this is right now. So is this going to be that lower high that, you know, comes back down and drop down to here? Or are we going to continue to break back up there? Could be a double top up there, or could just squeeze for a new high, and then that's it. Oh, I didn't want to move that. And then the whole market is shifting back to the upside, and gold is continuing to skyrocket for new all-time highs. So they've already, you know, pinned it and pushed it down. Gold is making its way back up, but maybe a lower high and push down. Or it comes up a little higher. We buy into that, but we have to respect this red zone when it gets in there, okay? So right now, look at the hourly candle. It's about to flip. 46 more minutes. This is the first 15 minutes. It opened. It was bearish, 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 bearish. Came in there, and it could be flipping right now, turning into a bullish hammer, filling that wick and driving the daily high. So now let's break it down on the 5 minutes and exactly what I'm just talking about. So here's the move, all of that, you know, prior to the call. Then it started to break out 5:30. I was brewing my coffee at that time. I didn't see this move, but some of you guys got it. Came in, pushed back down, kind of came back up, back up. There's kind of where they hit the highest point of the day. Now I can see at 6:35. Again, it tapped it at 6:50. Here's 6:55, 7 a.m. The drop, the momentum shift, and now it's coming back up 7:05, 7:10. So, you know, we're still holding support here. There's our daily high. What we got to watch for is, are we going to get a break of here? Are we going to get a close above here? Will it continue to fill to that red line? That's what I just placed there. Or get back up to that daily point of interest at that 665 number, okay? Otherwise, the volume is just, you know, consolidating in this zone. It's in this flag. We can continue to watch it in here. And also, I'll add my daily bar indicator. Okay, so just to remind me how bullish today is. It opened. It made that low. Let's look right now. Remember what I said? It might have been around 6 p.m. where it opened and just had a quick little drop. Let's see exactly where it is. 1600. There it is. Okay, so 1600. Sorry, 1800. My apologies. 1800 right there, 6 p.m. So you see when it just opened, you know, there was the wick. It just opened. The first 5 minutes came down and then pushed right back up. And then it came back down when after 7:30 and it came down. Futures market is right there, continued to push down, hit that lowest point of the day, came back up. So we didn't really make a big move to the downside. A lot of buying pressure, came back up, continued buying. So in order to, you know, like sell today, I got to see the sellers maybe pushing it through this green zone, maybe closing it below there, so that maybe I can make that a red zone. Maybe it comes in there a couple times and then can push back down to that yellow line. Okay, that's what I got to look for selling, or I got to sell at a premium area. I got to be selling somewhere in this big red box if I'm looking to sell. Otherwise, right now it's pushing in an uptrend. If we draw a trend line from the lowest point of the day right here. Let's just grab that wick. You know, if I keep it consistent, I'm going to keep it consistent right there. Okay, so you see now how I attach it from that wick. I get that low, start getting that trend. I can continue with this trend, continue to push it up. And we are still, you see right there where it came down, it's still respecting that trend line. I'll make it red because we based it kind of off of this 5-minute structure, but I'll also make it a little bit thicker. Okay, so that is our trend line. Okay, you can see it's trending up, it's pushing up, it's ascending. We've tapped into it, continue to bounce off of it. Again, tap into it, bounce off of it. So what I need to see in order to continue to maybe to look for sells is I got to see a break of that trend, maybe come in here, maybe close below there, then I know it's a trend break. I can convert this green zone to red, maybe comes in there and then sells back down to there, okay? And when it comes down there, I got to respect that area because that's where buyers could be to turn it up. If it pushes below there, then I have to absolutely respect the opening price, okay? Because that's where those big buyers came in and produced all of this big volume we have today in this candle, okay? So we're trading right at the highest point of the day right now. So we'll leave it like this. We'll add a 9 EMA and we'll add a 200 EMA. So my 9 EMA is this green line right here. 200 EMA is right here, okay? What time is it? 7:17. We're another hour away from the COMEX market open, and more importantly, 8:30, right after that will be that high impact US PPI news, okay? Guys, I got a question for you. Do you guys remember when I said we can do XAUUSD like Forex and then split screen? I can do a futures chart of gold. Do you guys want me to do that? We've got more than enough time today. Do you guys want to look at also, we can do a split screen with this and also a futures chart. I can do a top down, show you how it moves a little bit different. Maybe it moves the same. If you guys just got to give me the ticker, okay? And I can do it, no problem. So like right here, we'll leave this gold one to the left. Right over here, if I go to my watch list, I can go to add. Like if I just go to futures right here, do you guys want, like there's this one, gold futures, MCX. There's, what else? We have gold mini futures. We have gold futures with COMEX. Which one do you guys want me to do? You guys let me know, okay? I don't care which one it is. If you guys have a ticker or any one of these ones in specific you want me to look. COMEX, Armandi? Okay, no problem. Let's do COMEX. All good, guys, if we do the COMEX one? Right here. Okay, it's not the, give me the one that's the same Reese as the charts, okay? So we can, you know, which one you guys want me to look at? Okay, I don't want to waste too much time on this. Did you guys have the ticker? It's best if you guys just give me the ticker. I can search it and grab it. It includes GC. What do you got? GCZ5. MG. I don't have anything coming up there. MGC 2025. No, I don't have anything. Let's just go with what we had, guys. I don't want to waste too much time on this. I'll get these all on my own, okay? I'll figure all these out. It's okay, guys. I'll do this on my own. I'll get it all on my own, okay? I'll get this on my own, and then I'll do this properly, okay? I'll figure out which ones. I'll find them on my own. We'll do it tomorrow, okay? I don't want to waste too much time on this right now. In the meantime, what we can do is I want to do our indices as well, okay? So I want to get NASDAQ out of the way as well. because I don't want to waste too much time, because I know we have COMEX, then we have big news. I want to watch it till like at 9 a.m. and then I don't want to rush when I do US 30 and NASDAQ, because I always feel bad for the indice traders. We spend a lot of time on gold and then we just rush these. So I don't want to do that, okay? So I will leave US 30 for after 9, but I want to do NASDAQ right now, okay? So I want to kind of walk through NASDAQ because I also want to watch one of these indices during the news as well, okay? So starting with the daily on NASDAQ, for all of our indice traders over here. Okay, so key areas. This was previous all-time high. It is a double top. It came from December of 2024, moved into February of the new year, and you can see it's right there, red block. Then we started to close with green volume above at the end of June. So that's when I changed the color of the zone to green. We have not came in here as of yet. So, you know, those fish are still swimming in there. They're pending. They haven't been hooked yet. They're inside here. Okay. So the volume has not came inside of here. Okay. Also, guys, when we do the futures charts, also when we're sending out our trade ideas and signals, they don't correspond or correlate with those futures charts. So that's why sometimes if I do those gold charts, it's more for just live trading, but because it will throw off our traders with our trade ideas. Okay, so just hopefully you guys understand that. Okay. Okay, so what has NASDAQ been doing, guys? Do you guys, number one, just right now, let's focus on just NASDAQ right now. Don't worry about the tickers of gold. NASDAQ, do you see any pivot points? Do you see any areas where you could draw a zone right now, okay? And just look at it, and then I'm going to do my thing, and then tell me if my analysis matches up with your analysis. So first thing is, you're looking for a zone, okay? Number one, all-time high, okay? Anytime something hits an all-time high or an all-time low, you should be, you know, analyzing it or just placing a marker on there. So I know that that's NASDAQ's all-time high on August 13, okay? So I can see today we're not too far away from it, right? Remember what I was saying, you know, we're going into FOMC in the next couple of weeks. So maybe they're going to continue to drive to all-time highs. And then FOMC, when they cut the rates, could be one of those buy the rumor, sell the news events. So they're buying it right now, buying the rumor. And then when they drop that, then it's a sell-off, okay? That could very well happen. So I want you guys to see ahead of time how the market, you know, orchestrates this before it happens, okay? So right now, looking at the all-time high and those bodies right there. So if I was to draw, which a red zone previous right there, you know, I want to keep it still red. You know, I don't want to now alter my bias just because I see it trading in here now, right? If I did this back over here, when it hit that all-time high and it closed right there, body, body, and I did it right there, I'm always stretching it into the future. So you can see right now, it is in the future, and we are literally trading. Buyers are buying in that all-time high supply right now as I'm speaking, okay? So are they going to continue to buy through here and push it for a new all-time high, or is it going to get pushed down and then we're going to start to sell off a little bit, okay? So that's one zone. Where is there another particular zone? One zone I see is anytime you see like a wick, a wick, a wick, and a wick, and a body, make sure you look at this area, okay? So right there, I place a point of interest at those bodies, yellow line, and I can see that wick, 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 and then I can also see where it came down bearish and pivoted right there, okay? So I'm gonna show you guys with yellow lines what I'm looking at. You see right there what I'm looking at. Okay, I see some of you guys are not paying attention. You guys are worried about the gold charts. Don't worry again about the gold ticker. We'll figure those out as a team at SST, and then we'll have the proper tickers on here that correlate and with everything we do here, okay? So we'll work on that, guys. And then I'll do it like that, split screen. So don't worry. We'll get our shit together here at SST, and we'll get it going, okay? But I don't want to waste too much time just on a ticker, okay? I want to make sure we have an appropriate one that everybody can utilize, and it also complements our trade ideas as well, because I don't want the last thing I want to do is confuse more traders, okay? But anyways, you see right there, do you guys see what I'm doing? I'm kind of boxing in this volume right there, okay? So I get quite a lot of questions on this about how to do this. So guys, I'm trying to explain it right now to you guys. So you see right there where it was bullish, bearish, kind of bullish, back in bearish, bullish, right in there. Again, you got these candles that just cut right through here. The volume cuts right through, whereas bearish, bullish, bearish, bullish, but it's holding right up there. And so then I see a wick come in, go back up. A wick come in, close right there. A wick come in, go back to the opening price and go up. It come all the way down in there, a wick. So there's got to be some sort of zone right in here. So I'm seeing that the buyers are still pushing it above. So this has to be a zone where there is buyers or support or demand, whatever you want to call it. Okay, so you see there how I've now figured out two zones. I figured the all-time high supply zone above me. Looks like we're trading right in it today. It could be a double top and drop, or it could just continue to drive through here. Okay, but this zone is holding below here. I can see there was a fake out below, a pivot point right there as well. Do I need to start dissecting down in here? No, we're moving away from this pond where all these fish are, and now maybe these fish are positioning themselves in here, right? You know, the depth of market is getting stronger. So will it come in here? Maybe. And pick up these little guys. These are little fish in here, but the bigger ones are in here. Okay, the deeper you go in the depth of market, the bigger the fish are. Okay, so that's where there's the big ones. Okay, those are big tuna fish. You know, did you guys ever watch tuna that show on Discovery Channel or whatever it is, Wicked Tuna, where those guys catch those big tuna fish? Those are those big tunas in there. Okay, those good ones that we eat. If you guys are into bodybuilding, I'm sure a lot of you guys eat a lot of tuna. Those are those albacore white tuna in there. I could use a tuna sandwich with some mayonnaise right now. That would be delicious right now. So you see, guys, now what have we done? We came in here, one bottom. Our neckline is right there. That wick is literally like a double bottom. Came in there, there it goes back up, and now we pushed through this resistance point. So when you're looking, there was a point of interest resistance. We impulsively broke above it, got rejected. This day right here, Monday to start the week, we pushed and we closed with some volume above, and we're still pushing up with this. Okay, so I'm figuring out some points of interest. Another one would be, you know, representing 50% of this big bullish candle, and you see how it's a wick, a body, and a body. Place a point of interest line right there, right? So I'm starting to figure out my points of interest, okay? And you see how it's still holding, pushing back up. Now, if we come up to that all-time high, what's the number? 23,985. Now, all of this is price discovery. We've never traded up here in our entire lifetime. Where could it go? I don't know, but how do we do this? We use psychological numbers, okay? So yes, 24,000, you know. What you could also do is, like, you could increase this red box right up to 24,000, okay? It's only 15 points away right there, 24,000. I'm going to keep the yellow line, but move my red box to 24,000. Now, as a scalper, 25 points. I could go to 24,000, 25, 24,000, 050, 24,000, 075, 24,100, 24,125. That's as a scalper. You can go in 25 points or 50 points. More of like on the daily, let's go maybe 100 point increments. 24,000, what would be the next one? 24,100. What would be the next one? Would be 200, but I would target 250. You know, those ones are a little bit stronger, or 250. And then the next one could go again, you could go 300, 400, or 500, right? So that's for if you want to go up the chain, you can go, okay? So right now, let's start to figure out more so what's going on like yesterday. How are we trading? So to start the week, there was Monday, it pushed. These are top highs right there with the previous Friday, and then we came down and we closed with good volume. Look at the retest, guys. It like right here where it opened, it closed, it opened, it came down, retested. Look, right in there. I guarantee you that's 50%. Where it just retested. If you don't believe me, fib, open, close. Look at right there. Where's 50%? Right there. See 50%? So if I'm looking for, again, my point of control, a little bit above, a little bit below, you see how you could have literally bought a pullback on Tuesday, yesterday, if you had it marked with an alert in there, okay? So it came right in there, came right back up to the opening price, Again, that's a very important point of interest. Anytime a candle body closes and opens, stretch that zone into the future. There might be just a little fish still swimming in there. You know, just the little guys are still in there. We'll see if it comes down there and picks them up, okay? So you can see that all of our fish, they're swimming. They're in these are the ones that are in the deep waters down here in the depth of market, waiting, big pending orders. These guys are in here too, and we've got a little bit of fish in this one as well, okay? Now, look at, we came back up, we filled to those previous tweezer top highs. We created a new high yesterday, and we closed right at that red box, okay? So you see the red line, the red box, it is at a point of interest. Do I need to put another yellow line? I can, but I normally don't do it because I know what my zones represent, okay? So you see where it closed and it opened. Now let's follow today's volume, okay? It opened and it was initially bearish right at the open. It already has printed its low of the day so far. There's my purple line. Now I look too. Also, if it was to come back down, why don't I have 50% of the volume marked with a line? Just in case it was to come down, even if it came down today. Or later, it could come back down to lowest point and drop. Will it come all the way down to this yellow opening price of this candle? Or maybe 50% in here. We haven't tested in there. So how do I figure it out again? If I can't guess, grab your Fibonacci, open, and the closing volume. Where's 50%? 0.5 is right there. Perfect. Okay. So I got now another point of interest right there. I could find a zone as well. If I'm looking for maybe a little bit of a pullback buy to test out this zone, you can see it has not been transacted. Okay. We're still haven't came in here. So that fish we can put maybe in here. Okay. There's fish in all of these green zones. But when it comes in, what will happen? Will it come back in here, hook it, and go back up? Or will it just cut through this one and then go to the next one? Okay. So that's what we got to watch for on all time frames. Now I can see we came down, back up. We filled our previous wick, okay, yesterday. That's another point of interest. And look at, we've created our own high of the day so far, trading in this all-time high supply zone. There's my purple line. There's that orange line. That's how far off we are from the all-time high today. Not too far away from tapping into it. But right now, we've hit a high of the day and it's pushing down. So when it comes down to this yellow line, 885, will the buyers be there to continue to push it up? Will we lose this yellow line? Then it's going to come back down to the opening price, and then we're going to test the low and maybe come back down into yesterday's bullish point of control block. Okay, so right now, NASDAQ is very, very bullish. Okay, we got to acknowledge maybe a double top situation. Okay, this is the one top right up there, all-time high, and then it pushed back down. All of this is the neckline, that double bottom that took us back up to where we are now. So we're coming in the second top, guys, but it's still bullish. So it could break through, it could come through here, grab liquidity, and then they slam it down. That's a possibility. Then it comes down here and does this in the next couple of weeks, and then you can see NASDAQ selling back down in here. Just like if these were 5-minute candles. You know, if this was a 5-minute move, we had a nice move coming up in a buy. I say, guys, if you don't do anything at this red zone, you know, when I say hint, hint, nudge, nudge, I'm saying to do something. If you bought that, even these daily buyers, if they bought all that and they didn't do anything, look how the market returned right back down. Again, these sellers, if they didn't do anything, the market came right back up. So now we're coming back up again. So we're in this red zone. So if these buyers don't do anything, yes, it could continue to break through here. But what happens if it reverses back down and sells off? So that's what we got to be ready for. And today's, we have PPI news. Tomorrow we have CPI news. And then we close Friday, getting ready for FOMC next week. So lots going on in the markets. Maybe NASDAQ and US30 and S&P want to continue breaking through high all-time highs, continue to drive, and then maybe after FOMC, when they announce a rate cut, then they might cut the rates and then start selling off the market. Okay, so right now, still very, very bullish. Okay, so let's now, dissect this daily candle in the 4-hour candles. Okay. So 4-hour candles, you know, there it came up, pushed back down, came through there, higher high, big pullback, you know, liquidated a lot of candles down there, but came all the way back up. So it's coming. Here was a big bearish 4-hour candle Tuesday at 10 a.m. But look, came right in there, right back up in that green zone and continuing to test. Look at this 4-hour candle is strong as shit. It's coming all the way right back up, possibly to test today's daily high and drive. Here's the European candle, 2 to 6 a.m. So it's a bear spin top. So I can see that during Europe, we hit that daily high, came back down, closed bearish. Right now, this 4-hour candle open, small pullback, continuing to fill that wick. Will it fill all the way to the purple line and break a little further? If it does, what's above the purple line? Do we have anything? All I have is, you see right there, just a 4-hour body right there, okay? And I'm going to show you guys exactly where that volume is. Right there, to the bodies, right there, okay? So I'm going to stretch that into right there and make that a red zone just to show you guys. Those 4-hour candles came in there, right there. That was that impulse break to the new all-time high. Then they slammed it back down, and look at the next 4-hour candle. Open bearish, ignited, and just dropped. So even if we do break for a little bit, you know, we got this big red block right above us. And then after that, we have nothing. We just have that wick to fill. Just like, remember gold, when it had that big all-time high wick and it continued to fill it, okay? I could also go halfway from this red box, orange line, halfway, right there, and mark that with a white line just to let me know if it comes in there. That's my hourly resistance, where they could keep it a lower high right below the high, all-time high. Okay, so I just want to put that white line just for reference at 23,960. You guys can't hear me, or you can hear me? Zoom, can you guys hear me? YouTube, can you guys hear me? Yes? Yeah, you can. Okay, so it's one. This the foreigners. It's probably you, maybe yours. Everyone else can hear me. Okay. Okay, so look now how strong it is. 4-hour coming up. We can go to the 1 hour. Look at the 1 hour now. Okay, so now you start to see I can start to see now the big sell. What time was it? So I can see we were moving up. You know, right up to there, the daily high was London, 3 a.m. Look at the 4 a.m. candle. Very, very bearish, came down. And then 5 a.m., we came down right by the lowest point of the day, but it came back up. Now we're coming up, 5 a.m., 6 a.m., 7 a.m., and then we're going to go into COMEX and also Wall Street and news very soon. So it's coming right back up, okay? So we got a move that came up. It went back down. There's our neckline at this daily point of interest, coming right back up, okay? So again, is it coming into do a double top and drop a little bit? Or is it gonna break right through here, close above, we flip that green, and then we're driving up to that 960 white line, possibly all-time high, okay? So NASDAQ, very, very strong right now. Okay, so continuing to push up on the 5 minutes. See how we're trading now in this zone on the 5 minutes. Came back up. There's where we hit the daily high right when London market opened up, 10 after 3. And then it kind of came back down. 4 a.m. the big drop. Bottomed out down there. And now it's coming right back up. Wow, look at these two bullish ignited candles. These are like Marabuzzo candles, okay? You don't often see these things. Look at this candle. Okay, so the Japanese call these Marabuzzo. It opened, ignited. Look at it. Ignited, bullish, 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 and it closed at the highest point. There's no wick. Look, these are very unusual candles when you see these, but know what they are when you spot them. It absolutely opened, ignited, no pullback, no drawdown, no lower wick, filled with bullish, bullish, bullish volume, and there's not even a wick at the highest point. It closed right at the highest point. Look at that candle. It's beautiful. And then look at the next candle. Opened, ignited, just a tiny flash of a wick. No wick. So it's like a firecracker. Even with no wick, you just light it, it's gone. So look at it continuing to fill back up right up there. Even if I'm just looking to cut this thing in half right there, it's still holding strong, okay? Look at this thing. Wow. Okay, so we are traveling right up to this highest point of the day. Let's see, again, another ignited, open, filling, pushing. Holy shit. very, very strong move right now on NASDAQ. Wow, okay. So this is where it could test the highest point of the day, maybe a double top and come back down. Unbelievable move here. Wow. Very, very strong, okay. So we'll keep NASDAQ right over here on the right side. Let's add our daily bar indicator. There it is, how strong the daily bar indicator is. Our 9 EMA and our 200 EMA. I will do US 30 a little later on, and then we'll keep these two side by side. For now, we can keep NASDAQ as one full chart for now until we get to US 30. So I will flip-flop between both of these, but let's look at gold. Okay, so gold came to the highest point of the day, pushed down, came back up, bearish engulfing. Okay, now we broke that trend line, guys. Okay, now we're testing our green zone. So let's see, there's that white line. Let's see if it kind of will get a wick and come back up, and maybe we'll have a buying leg, or is this really a lot of selling pressure coming down into the market now, okay? Okay, so now I can see I can do a 5-minute red zone at the highest point of the day. If I bring it down to those bodies right there, so stretch that into the future. If we ever come back in there, you know, that might be another selling point. Okay, so it came in, back down to that trend line, came back in, lower high, 4 bars. They're pushing it down, but we're trading into this green block right here. That's that hourly white line. Okay, and it's a nice psychological number, 3,649, almost 50. Okay, guys, thank you guys so much. We have over 500 viewers on YouTube. I appreciate you guys. So when we get our futures charts in order, then we'll do like a split screen with gold, and then I'll have a split screen with a futures chart, okay? We'll do the same with NQ, with YM, whatever you guys want. But I just want to make sure that we have the correct charts that also are very similar to the trade setups that we do send out to the group on Forex, because we don't want any confusion, okay? So I apologize for that today, but I just want to make sure that we have the right securities, right tickers, okay? Okay, and also looking at time, it's almost 7:45, so just going through the news. Guys, if you're just joining, welcome, good morning. Just don't forget, guys, we do have some high-impact news today at 8:30, our PPI news, and also 8:20 COMEX market open, okay? So that will be happening very, very soon. Okay, so this 5-minute candle is going to close in 1:20. Okay, so we came down in here. It's got a wick. We broke that trend line. So this trend line was always holding as support, support, support. Now with that volume closing below, this could be now resistance. So for example, if it comes back up into here, it could tap into that trend line and then go back down. It could be resistance, okay? If it gets back above there, it could utilize that trend line back as support and continue to go back up, okay? I'm not a big trend line trader myself, but I do put the trend lines on for everybody because I know you guys use trend lines. They do help. You know, the trend is your friend. So you always want to trade with the trend, but now we see that the trend is starting to break on the lower time frames. Okay, here's the close of this candle in the next 30 seconds. I always say, guys, let's watch the last 30 seconds to pay attention to this. Okay, so it's coming deeper down in there, big bearish candle. So it's possibly going to close near the low. It could continue to push down just off of that close, okay? It's closing, yeah, so see how it closed right at the low? Got an ignited bar that could continue possibly starting to push down into here. Where's maybe a good location? Maybe if we're looking for a deeper buy, I would be looking maybe, let me see here. Okay, so here, I got a wick, a wick, a wick, a wick, wick. So lots of resistance there, another wick. And then with that body closing above, you know, down there, that red line, if it comes down to 647 down there, that might be a good opportunity maybe to look for a discounted buy on gold. If you're bullish on gold, like down in here, Otherwise, we see it holding right now at the hourly. Could be a bullish candle coming back up, but I'd like to see how it reacts at 50% of this bearish candle, and maybe will it also close above and build off this green zone and then have one more leg to come back up. Otherwise, it could just start, buyers are here, they're buying it, but it could just come into 50% of that previous candle and then go back down. And then maybe here would be a possible good discounted buy. The bottom is the best, right? The deeper you go, it's better. But sometimes when it just comes into about 50%, it starts to move back up, okay? Okay, so strong candle coming right out of there. Wow, okay, very strong. So it just bypassed like 50%, cut right through it. It's engulfing the candle right now, but still 3.5 minutes to go. This is a long time, okay? So you could have possibly bought right out of there. I personally didn't. So it's not like I don't want to just buy the highest point because I missed. I want to see now, will it get rejected? Will it come back down in there? Or more importantly, will it close above here? So see that big rejection. Okay, so it was a really strong bullish candle. It got above there and then they just slammed it back down. So if you wanted to buy that highest point, you could get back in right now. You're still getting it on discount, but you got to also understand that sellers just slam that down. Okay, so will it build back up? And maybe you can build that, you can buy the build up. See how it's continued to maybe refuel itself, like a rocket filling itself back up. And then we got halfway into the to go into the candle. So we're at 2.5 minutes, and that could be the halfway point. So you see sellers are pushing it down, pushing it down, pushing it down. See how beautiful and bullish that candle was? But sellers are pushing it down. Now it's kind of refueling itself. If it gets again above that green line, it could continue to go back up, fill its wick, and take off. So if you still are considering maybe buying, you could, or you could just wait for the close of this candle, okay? Okay, so we got 2 more minutes to go, less than 2 minutes to go into the close of this candle. Okay, I'm gonna buy. Okay, it came back up. Okay, so I'm in a buy. It came back down, came back to that above that green box. I'm in a buy, right? So it came back down. Now I want to see, will it engulf the candle? Will it close near the high? Will it get another maybe continuation bar? Or will it come all the way right back down, inside here? But I'm in a buy. My stop loss, I'm going to place it below the green zone. Okay, if it comes back down, maybe test that red line. I don't want to get stopped out there because maybe some buyers will come in there. If it comes down to that yellow daily point of interest, I kind of don't want to get stopped out there either. So I kind of want to give it a little room to breathe. If it needs to come down in here, pick up a little bit more buyers, right? So that's my maximum risk on the trade right there, just above that 200 EMA. And I'm looking to see if it can, retrace right back up to that red zone, okay? So again, a lot of sellers up here. They rejected it back down. So with 48 seconds to go, are we going to lose our opening balance of our bullish volume? It could turn as a shooting star candle and then come deeper down. I will be in drawdown if that's the situation. Or will the buyers come back up and close it back above this green zone, and then we can build off of another candle? Maybe we found a little consolidated area right here where the market is going to now consolidate somewhere like right around here now. So I'm trying to buy a pullback in this green zone to continue to take it back up and then retest these here, okay? Here's the close. So it looks like it closed as an inverted hammer candle. We still retained a little bit of bullish volume. Not what I wanted. I would rather want it to close, above the green zone or near the high wick of the candle. So, sellers pushed it down so they could come right back in and continue pushing down. But let's see if buyers can continue with a higher low and build it back out of here, okay? And we're going into 8 a.m. in the next 10 minutes. So we're going to have a new hourly candle coming into the markets as well. Also, we're trading at this psychological area, this 3650. So, this is an area that, buyers and sellers are always at 3650. So we'll see if the buyers continue to ask to trade above like 51, 52, then we should see maybe one bullish leg coming back up on gold. But if sellers keep bidding down here at like 647, 646, then the market might be like a magnet and come back down, okay? So I'm going to just let it consolidate here and see what happens. NASDAQ made a nice move, okay? So NASDAQ is right up to the highest point of the day, right up here. And also, guys, the gold signal that just got updated a little earlier, okay? Running some good pips over here on the signal, if you guys got it right here. The gold long at 36.43, okay? So continue to push to that 55 for over 140 pips, okay? It's retraced down since then, so we're going to see if, 650 again can continue to hold up, maybe push up a little bit here. SSDN, good morning, welcome. Thank you for joining. Serenives, welcome. Good morning, guys. Okay, so it looks like we got a bear flag. Came down, came back up, closed with volume, coming back down. So, they could come down. I also want to watch that red line right there. But if we can pick up a higher low wick and just flip this candle, we're not too far away from closing it back above this green zone. Okay, just got to get some buyers to start asking to trade up here. Maybe if we can close, maybe we could build that next leg to come through here, the bullish leg. However, there is a lot of selling pressure, okay? So we got to close in a minute 45, and then we'll be walking into 8 a.m. very, very soon. Dale, good morning. Welcome. Okay, so we got buyers are still here, at the bottom here. But I like to see a strong close. Okay, I'd like to see a nice bullish close above here, because it's still got that bearish head, it's still got that hanging man candle. So I know the opening balance have those initial sellers. So, we got to kind of flip the body and, I call it like a squeeze of a candle. We've got to squeeze those early sellers and then close it strong here and kind of move the market away from them. Okay, just like the sellers are trying to do to me. They're trying to, I got in a buy right there. They're trying to move it away from me, so that I can get squeezed out of the market and they get my liquidity. I'm trying to get the seller's liquidity on this exchange. Good morning to everybody. 650 viewers. Amazing, guys. Amazing. Thank you guys for joining us. It's a big day, PPI news in the next 35 minutes. So, I hope to be out of this trade by then. Okay, here's the close. It is a bearish engulfing candle that closed below, open ignited, so they could continue to push it down. I want to see what will happen at this red line if it can come down here. The reason why I have this red line is because it was a wick, a wick, a wick, a wick, a wick. These wicks, and then it closed right there with that candle right there. It closed, and then we had this big, nice bullish candles print right off of there. So, maybe this red line, if it comes down, that could be a supporting line at 3,647.50 cents. If it needs to come down in there, I'd like to see if that can hold up structure in the market. Okay, we got a little bit of barcoding volume where it was bearish, bullish, bearish, maybe coming back up bullish, but you know, it's going to be a battle. The sellers and buyers are battling. Right now the sellers are winning this because they're creating lower lows and lower highs. We need a nice strong bullish candle again to close above my entry point, above 3,650 and 50 cents, and maybe we could start to make our way back through here, maybe testing the top of this trend line. I'd like to see if we can come into 50% of that red box right to those bodies right up there. That would be a nice little TP up there, or reduce risk in the trade if we can get it up there. But if the buyers, you know, can't ask up here and we can't close it above here, just naturally another lower high, and sellers could continue to push this thing down. Okay, we're in a bear flag right now, unfortunately, but the bear flag is in a higher time frame area of demand. Okay, so that's why I'm in a buy as opposed to in a sell, because this could be a higher time frame supporting area, and maybe 8 a.m. we could see maybe momentum move to the upside again. However, I've been part of opening candles on the hour and they've done opposite direction. You know, there was some nasty ones I've had in the last couple of weeks where I'm in a buy and it's right at profit, and then they open the hourly exchange and it's an ignite account and just drop. So I've seen my fair share of these hourly opens. I try not to get into trades right before an hourly open, but this one I opened up. I've been in this for about 15 minutes now. So we came up bullish again, you know, right up to that point of interest. Sellers pushed it right back down. So now it turns into a bearish pin bar, maybe a shooting star candle, and then the sellers continue to push it back down. However, buyers could bring it right back up. You know, we're just consolidating basically. It's in a small range, but 8 a.m. is going to open up, and that's going to bring in more volatility and more volume into the market. So I got to watch my stop loss down here. I got to be ready, because it could just be a black candle that opens and comes right through here. Yes, it could come down, catch a wick, and go back up, but I don't kind of play those games because I've seen it come down, close below, and then just drop, okay? And I don't want to give it any more into this. That's more than enough. I've given it the entire green zone to basically find some buyers, and if they're not there, they're not there. Like, I'm not going to fight it. I'll get out and I'll look for another trade. Another thing too, what some traders do is, if it's not lining up with their analysis, they can close the trade like right now. You know, take a loss, take a minimal loss. But if you don't see the trade doing what you want it to do, and you've been in it for 15, 20 minutes, 30 minutes, 45 minutes, and it's just continuing to do this, it'll go and profit a little bit, draw down a little bit, profit, and you're basically like kind of near break even, and you're getting tired, and then maybe you want to, you know, continue review or look for a better position. There's nothing wrong with closing the trade, taking a small loss, and just refocusing. I do that from time to time. And then on your journal, if you'll have an L in there, because yes, it is a literal L, but you can make a description why you got out, what was your thought process, why did you get out, and things like that. And then when you're reviewing it, you'll see, yes, I did take an L, but it didn't come all the way down to my stop loss. I took a little bit, and then what was your reasoning behind it, okay? And then that will help you when you're learning. Okay, but here's the close in 10 seconds, and we're moving into 8 a.m. Okay, so I'm going to kind of zoom in because I guys want you to see how hourly candles open up. Okay, so you see right now who has the momentum going into the close. Buyers closed it right there. Here's the open. Looks like it's bearish, turned blue. So with this hourly blue candle that just opened, you see how quickly it got rejected. That's a lower high and pushed down. So sellers could easily now push it down, break that low, and travel down to this red line. However, buyers have a higher high. Okay, so it's coming back up. They're asking early on this new hourly candle to trade up in here, but we're still in this consolidated zone, right? Buyers and sellers are fighting this. Still need to get that closing volume above here. There's our 9 EMA. So if the buyers can close it above here, we're closing back above that 9 EMA, and maybe we can push to fill this wick and drive back up here. But still, a lot of sellers are here. Every time it comes up, gets rejected, lower high. Comes back up, gets rejected. So just got to continue building in this. We're in this green zone. Just kind of like we lost our buyers, you know. Maybe the market is just coiling up for the PPI news too. Okay, so even lower high, lower high. I'm a very technical trader. I look at all of these things. They pushed it right back down, came back to the opening balance, came back up, came back down. It's a small doji candle. So you got both buyers and sellers in this, not really going anywhere. So it could be any direction. Basically, it's like a coin flip. The close of the candle will determine the ultimate direction. Okay, so NASDAQ sold off the red box, came all the way down. See where I have that red line was 50% of that candle. It almost came in there, coming right back up. So NASDAQ is building its way back up. This gold is like a snail right now. We got caught up in some consolidation. I'm in a buy. I'm in a buy. I'm in a buy. You know, you just even looking at these 5-minute candles right there, there's those bodies, body. See the wicks? Like we need, like for me, I'm a buyer. So I'd like to see the buyers, you know, just close above here, just right above here. Maybe then it will retrace back down to this red line and then to push to fill that previous big wick. And then we're driving maybe somewhere up here. But you can see how this is resistance holding real tough. Like we haven't even broke above here. Even to make an impulse break of this, we haven't done it yet. Whoops. I just want to get rid of that arrow. There we go. Okay, so now we have 90 seconds to go into the close. This is representing the first 5 minutes of 8 a.m. We've got some bullish volume. It's just barcoding. Bearish, bullish, bearish. Came back up bullish, got rejected back down, closed with a little bit of bullish volume. We had a little bit of a pullback during this hourly open, but we got some buyers asking, but more so, can we punch out of here and close above this so that we can build a little bit and continue back up. Good morning, Sergio. Welcome. Look at the price where the red line is. $3,649.99. It's like 1 penny. Like, come on. Like, that's how psychological this market is. Okay. So big fight between buyers and sellers here. Who is going to accumulate at this psychological area? 3650. Here's the close, guys, in 15 seconds, okay? So I'm very technical. Like, I zoom in on the candles, watching the closing prices, everything. So it's coming up right here. Let's see the close. Because sometimes they make a big move. It'll close strong or it'll just lose all the volume at the last second. Okay, so it closed right up there. Open bullish ignited. Yeah, see, that's it. It was a short-lived bullish ignited open. It just lasted for like 3 seconds. And then it's coming down bearish back down. Okay, so we're still in this consolidated block. It is making a higher low, possibly higher low. If we grab a wick right there, perfect. So we grabbed our higher low wick, but just can we get it above this 3650, this red line? Man, it's like gold just died. It's got no heartbeat right now. You know, it could be getting ready because 15 minutes away is COMEX, but the PPI news. That's why the market is kind of just lost its heartbeat right now for gold. Just trading inside here. But we got still higher low, higher low, higher low. We made a little higher high, but can we get it above this resistance right up here? Okay, we got a nice hammer candle. So can they just redistribute just a little bit of volume back above here? More importantly, can we close above this red line so that we can make this resistance support going forward and maybe build off of this? You know, we want to build blocks, right? We want to build resistance, turn it into support. Okay, guys, so, oh man, this price action sucks. This price action sucks. But, hey, we've got to go with the flow, what the market is showing us, okay? I don't make excuses. This is what the market is showing us. I'm in a buy because I'm buying a discounted discount area from a higher time frame. Like I see it came down, came down, came down, came down into our green zone. So it's green for a reason from a higher time frame. So our buyers here, they are here, but they're not closing with conviction back above here, right? So, you know, this could just come up, you know, and then a seller could just come in, slam it right back down. So kind of want to close, you know, strong and start to move out of here, maybe prior to COMEX, and maybe start to just reduce my risk in this trade as much as I can prior to that big high impact news, okay? Thank you guys. 800 viewers on today's call is unbelievable. Thank you guys so much. I know it sucks. You guys are watching me in a drawdown here. It's not the greatest for entertainment, but hey, this is what, welcome to the world of trading. I'm sure some of you guys have traded in drawdown yourselves, but you know, we're still watching this thing. I might get to the point where I get sick of this and just close it out. Like, I need to see something. So you see, we got, again, rejected right at that red line. So all of our sellers are positioning themselves right there. Came back down, you know, down to here. So if we lose this, sellers could take it out and take out these lows. And I would be watching this red line down in here. We've got a good return wick coming back up. We have 60 more seconds to go into the close. Okay, so it didn't really break any of our supporting structure down there. You know, it's still technically, we got tweezer bottom lows with the previous wick, but it's still higher than this one at 755. So it is still building higher lows off the bottom. We really haven't lost anything off the bottom. That was a good return. We're back to the opening price, but it is a bullish pin bar with thin volume. Can we, again, close strong above this red line, or seller's going to come back in the last minute and push it right back down? So we're just consolidating in this range right now, right at the psychological block, 3650. It could go either way, guys. This is a bear flag, could drop, but also we could kind of close above strong back above here and push our way back up. But man, this is a tough one. This trade requires patience. Here's the close in 10 seconds. Okay, so a close with bearish volume. Next bar, opening, bearish ignited, getting ready to push down. So, you know, as soon as it opens bearish ignited, it's a strong selling candle. Okay, so I'm watching, are they going to take out that wick? Where my dotted line is, it's lined up with that 755 wick, so it's right there. That would be an equal bottom low. No, they took it out, okay? See how that candle printed real quick? Did you see that? How it took out, it was already there and it printed the wick, then turned back up. So sometimes you're going to see that your charts do that. Just the way how the charting platform works. Okay, but we got a good wick. Again, it's still got that ignited head. Can we flip it blue? Watch, guys, okay? See how that ignited head is still holding. That ignited bearish head. It's a hanging man candle. See how close we were to just flipping it? And then the sellers, again, are protecting that opening position. Okay, so sellers are strong here at 3,649.36. Very strong here. Okay, came down a little deeper. Can we return it back up? Notice, guys, we almost flipped that candle. Like one tick would have flipped it blue, and then we could have drove back up. So you can see how strong the selling pressure is still holding this, okay? I've got my stop loss down in here. This is my stop, okay? So I'm giving it room if it needs to come a little deeper down into here. I'm watching this red line really closely, okay? We haven't came down there, came deep, but man, we were so close to flipping that candle back up blue and turning back up, and the market kept it down, okay? So we got to watch now the close of the candle, right? We still have 3 more minutes to go. Lots of time on this, but it is a bearish hanging man candle holding down. Look at, again, are we going to flip it blue, or are they going to continue to hold it down bearish? Wow. Again, still holding that, that head bearish. Man, so we had 2 opportunities to flip this candle right there, and you can see how strong the selling pressure is, okay? And now, again, that's that volatility. When it whipsaws back up like that, it kind of triggers some pending orders in there that we're asking to trade in there, and it triggers them, and that's that whipsaw effect. Again, we're going to try a 3rd attempt to break the opening of this candle, okay? And you can still see it is holding its that black bearish head still and continuing to push down. Wow, so sellers have been holding this price down. Here's a 4th attempt now to turn the candle. There was the flip finally, okay? So now the candle flipped. It flipped from its bearish opening position. It just flipped now. So those opening sellers, you know, are in drawdown currently, just by a couple ticks. But that's how a candle flips into a bullish pin bar and can close possibly strong as a hammer. But that's what created the wick on the candle now. So we no longer have that bearish ignited open. So sellers are still there pushing this thing down. Now we have 90 seconds to go into the close. So are they going to close this below all of this structure? Then it will have maybe one more candle leg pushing down, or can the buyers come up again and close it strong in the last minute into this close? So right now, market is still, gold is technically bearish, pushing down with lower lows, lower highs, and lower lows. But I'm in a buy due to this higher time frame demand area, okay? So I want to see if it will hold up. You know, I wanted to buy a discounted buy after this big bearish move coming back down from the daily high up here. So I thought would be a great discount buy opportunity in a higher time frame. But you can just see how strong this selling pressure is going into COMEX in the next 5 minutes. So I got to get to the point now where I really have to manage this trade. Do I want to keep this trade open going into COMEX? Will I still be in this trade going into PPI news? I've got my stop loss down there, but I can, you know, maybe start to de-risk by bringing a little higher, or closing maybe half of this trade at a loss and keeping half running. All of these things to consider. Right now I got to consider this red line when it gets down here. This is a very important area right over here. When I'm looking at all of these multiple wicks and where that body at 530 closed and where that one at 535 opened, that caused that big bullish move to come all the way back up here. We've retraced all the way back down basically to that red line. So it closed bearish. So right here, guys, we do have a bearish, you know, level right below us right there. So that's representing 50% of that bearish candle as well. Man, we had so much opportunities to close that up there so strong and make our way, but those sellers are very tough in there. Okay, a lot of selling pressure cutting through this green zone. So the next thing right there is our daily point of interest, that yellow line, 3646. And then just below there is my stop loss. So I got to really watch this, guys. I will verbally let you know if as soon as I get stopped out. Yeah, I may lose this trade. That's part of trading. You're absolutely correct. Okay, so you can see the volatility increasing 4 minutes to go into COMEX. We got a great return, you know, right off of that red line, just a little lower. Good return. Maybe that's what we needed to trigger those buyers. Okay, so, you know, it's a nice bullish candle, but I don't get excited until it closes, because I've seen this a million times where it comes up, you know, get a lower high, and then they slam it right back down. Okay, so we're right back in that consolidated zone. It's how the candle closes. So far, the sellers are showing me their strength. They're closing down below here and continue pushing it down. I've seen the buyers come back up, but they failed to close. So will this return candle be the one that closes above here? Then maybe COMEX will open and we'll have that bullish exchange to the upside. Okay, but on the flip, if it can't, lower high, and sellers push this down, COMEX could open bearish and continue cutting right through here. Okay, so it's a battle. And when you're in a trade during this time, you know, I might still be in this trade going into PPI. So, you know, you gotta, when you get into a trade prior to news or prior to exchange opens, you just gotta continue watching, watch your risk, everything, you know. There's another situation where it could come right back up to break even, and then some traders just say, Ron, you know, I'm throwing in the flag. You know, I was in a little bit of profit. I was in some drawdown. Now I'm back to break even. I just want to get rid of this, clear my mind, and go back to trading after news. That's fine. I do that too. Holy shit. Like, look at the resistance, this red line. 3649 and 99 cents. Man, 3650, that psychological area. That's the battle right now between those buyers and sellers. Guys, hit the likes on YouTube if you guys can. We got 850 viewers. We do appreciate it. If you can hit the likes prior to COMEX and going into the PPI news. Subscribe to the channel if you haven't already. We do appreciate it, guys. Okay, we're 90 seconds away from COMEX. Man. And be prepared for volatility, guys, okay? So COMEX, and then we have PPI news in 10 more minutes at 8:30, okay? We can see this resistance. You know, some of you guys trade with the 9 EMA, this green line. We're struggling to, you know, close above that 9 EMA, so it's still considered to be bearish until we get closing volume above there. We're still trading in this deeper demand area, okay? So that's my bias, why I'm in a buy. You know, currently it's in a drawdown right now. And guys, please don't risk too much during PPI news, please, okay? Stop getting in the habit of blowing up accounts during red folder news. You know, it's kind of getting played out, that strategy. Doesn't work. Might work 1 or 2 times, but consistently, you're probably not going to keep up. And one mistake, your account is gone. So don't be gambling, guys. 30 seconds to go. Man, this is gonna watch, guys. Okay, I'll even zoom in to show you how they can gap up candles, gap down candles, the way how they can close, all of these things. Here's the close right there. Okay, so this red zone, I'm just going to flip green for a second, you know, right down there. Was that like kind of a liquidity grab down there? So, you know, it's opening, okay, kind of pulled back, a little doji candle. I'm sure we can possibly ask to trade up here just to break out of here. But wow, sellers have the wall, already established. So it's coming down. If we retest 50% of that bullish candle, somewhere like right around here, can we pick up a wick right here and maybe continue to push up right here? I'd like to see a wick right there. Yep, that was right where I want to see the wick, right, like, you know, by this white line. That's that hourly, man, big push, okay? So now we're barcoding, bearish, bullish, bearish with this COMEX market open. So we've got a wick, but we still have bearish big body, okay? So this bearish body could come all the way down, engulf, and continue to push down, okay? Maybe they're trying to liquidate the longs prior to the news, okay? Like I'm long, I'm in a buy. So the market could come down to liquidate all of the stops down in here, then pick it up and turn it back up during PPI, okay? So that could be a market strategy, what they're trying to do to myself as a long, as a buyer here. But we're still in this consolidated zone. Wow, okay. So it's coiling up both sides. Like if it breaks out of here, all of these short sellers, their stop losses are all above here. So the market could come up here, liquidate the shorts, and then maybe take it down during PPI, okay? So, you know, it goes both ways. I'm buying, you're selling, someone is selling, I'm buying, it's both ways, okay? So we got a great return, but remember, I don't get excited about returns. Like I get excited when candles close. Even that big bullish candle did not close above that red line. So I'm still not convinced that the buyers are strong yet, okay? They got to close above here. We got to continue, maybe just create even an impulse break above here. That could change up the entire depth of market going into news, right? So there we just flipped into a bullish pin bar hammer candle. Can we drive with this? Can we like just move away from this zone, diverge away from it, close maybe outside of this green zone, and then have more and more pending orders build in here? And we have 2 more minutes to go, and then we got 8:25, and then 5 more minutes leading into that PPI news. Man. Okay, so we got that candle that made that higher high, okay? So we got a high, higher high, high, okay? So in order to continue to move up, we got to make higher highs. So this candle just printed a new higher high, but now let's follow how the volume will close, okay? So we printed that high, sellers coming back in, pushing it right back down. Holy, this volume sucks. Shitty volume, both ways. Yeah, big news coming up, guys, in another 6 minutes. Man. I hate being in a trade like this prior to news, but I don't have a lot of risk on this. So I'm okay with that, but normally I should be de-risking, you know. If I see this candle start breaking out, like here, I'm going to start taking my stop loss, maybe put it below this red line, maybe ultimately below that green box, and just de-risk. But if I don't get that candle breaking out, it could continue to come back down. So I'm not de-risking yet. I'll verbally tell you guys, right? Okay, so here we go into the close, 18 seconds. That bearish volume is continuing coming down. If it closes below there, you know, we got one more leg easily coming down. The next candle could open bearish ignited and start pushing down. So who is going to close it? Where is it going to close? We're barcoding basically. Bearish, bullish, bearish. So guys, that's why I didn't get excited. You know what I mean? When it turned blue, okay, no strong close. Again, we opened ignited bullish again. So we're literally barcoding bearish, bullish, bearish, bullish. Okay, so it's a tug of war between buyers and sellers going into this news. who is going to win? Someone's going to win. So this is what we got to watch. It's a bullish ignited open. Again, can it come up there and close above here? If it can close above here, maybe during news they will redistribute all of this. Maybe those PPI numbers will come out shitty for the US dollar, and then gold will be a buy. And we've already accumulated in this demand area, and then it's could be our time to get paid, right? So, but I don't look at those things until volume closes above and gives me confirmation. Right now, that's a beautiful open candle. It's a bullish ignited open, but we're coming up to this 3650 red line resistance, and sellers could just, you know, deflate this and bring it all the way right back down and return it, and then it's bearish, and then coming after news will come after, take out all these stops down here. Okay, I'm not the only buyer in gold right now. I'm sure there's half of all of us are in buys. Some of you guys are in sells. I understand how the game works too. Three more minutes to go. So if you look at Forex Factory, or you'll see pending right here, these big folders, core PPI. We already did our blog, producers price index. So US PPI likely to highlight lingering inflation ahead of CPI data. So we got to really watch those numbers coming in. Holy, like look at this little zone we got caught in here, man. Oh, that's a nasty rejection. So we've got this inverted hammer candle that opened bullish ignited. If we lose that bullish ignited open, you guys know the deal. We'll turn into a bearish pin bar, maybe a shooting star, continue to push down here. And with the momentum of the markets and news, it could be a big bearish candle. So I'm just going to place a hard stop now in the market. Right there, I'm placing a hard stop. Normally I don't do this. Normally I trade with my own mental stop, but I'm placing a hard stop due to news. It's right there, 36.45. Man, we just lost our opening strong candle, got rejected at that point. Now they're dropping it down. Okay, are they going to try one last kind of liquidity push to come down here? If it closes below, could drop, maybe pick up a quick wick, could close back strong. Man, 2 more minutes to go. This is why you don't want to go high risk during news, okay? For these particular reasons. It could be out of your control. It could be out of your control, right? So everyone, please check your spreads. Check your lot sizing. Do not make any mental mistakes. If you're trading with a 0.2, make sure it's a 0.2. Because you could do that mental mistake and put a 2.0 and then you've blown up your account. You've done something silly. Right now, everyone, please double check your sizing, position, your whether you're using futures trading, you're trading with contracts, or you're trading with lot sizes and Forex. Double check your spreads right now. If you're not even in a trade, right now is not the time to take a trade. It's the time to double check everything. I'm unfortunately been in this trade for a long time now. I got in at 7:45, so I've been in this trade for 45 minutes now. I could, close it out right now and just watch news, but I'm still building with this. I'm not highly over leveraged like some other traders do. I can give it room to breathe. It's still technically in this higher time frame demand area, this big green zone. It's just we're not closing strong. We're just got caught right here in this coil up. And we got the news coming out in 50 seconds, okay? Please, guys, use proper risk management. We almost have 1,000 viewers on here. So trade proper, guys, please, okay? I have a hard stop down in here. Just to let you guys know, maybe I might not survive to the news. Maybe they'll just drop it down now and stop me out. But I do have a hard stop in here. It might be one of those bloopers on live traders that it comes down, stops them out, and then it goes right back up. But that's what it is. I tell you guys, I got a hard stop right there. Here's the news. Boom. Okay, so it's bullish. Okay, wow. Okay, so you can reduce risk. Okay, I'm gonna go to a not break even, right above that green zone, guys. That's a target up there. Holy shit. Okay, I'm going to take out 80%. I'm taking out 80%. I'm not even looking at the numbers right now. I'm just taking out 80% and I'm going to break even. Okay, shitty PPI, shitty dollar, gold pump. And we were in that accumulation. That shit is funny. Okay, so I took out 80% in the red zone. Man, I worked hard for that, okay? And then the rest, 20%, is at a break even, okay? I'm not playing games in this news. Just get my money and get out. Oh, man. What is it, Red? It's negative 0.1 PPI? Wow. Okay. So you guys remember the month before it was 0.2 and it came out 4.5x times to 0.9. Now they didn't. Look at how shitty it is. Negative 0.1 on core and PPI, guys. This is the producers. Man, the US dollar is shit right now. It's sinking, guys. If gold can close strong back above here, we can build off of this. But man, yeah, I closed too. Jesus, I closed myself. I closed out 80%. I got 20% running. But those are not good CPI numbers, guys. Wow. Or sorry, PPI. Tomorrow's CPI. Holy, okay. So do you guys see how you can utilize higher time frame demand areas, even trading into news? I don't recommend this, okay? I didn't expect that, but when we did the PPI, remember what I told you, PPI could be very negative. Tariffs affect manufacturing, will affect the US dollar as a negative. So I saw that they brought the price down prior to the news. You know, they came as deep as they could, but could not break that red line right there, okay? And you see how that held up deeper in the depth of market. That's where those bigger fish were waiting, you know, down in here, okay? So there was a little bit of fish there when I bought, but the bigger fish were down in there, okay? So that's to show you how a depth of market works. And guys, this is, you know, trading into news. I was in that trade. It could have gone, you know, opposite. It could have been just a big bearish candle drop and hit my stop loss, and that's it. But the news correlated with this move, okay? And it came to a nice discounted higher time frame area of demand, okay? So, you know, I got in and I got out. I told you guys, as it was coming up there in the red zone, I closed out 80%. You know, hopefully you got filled to the upside. Sometimes when you're closing out a trade, the market will fill you as it's moving up to the upside. But that was just shy of the daily high, okay? So it could get rejected. The market absorbs it and it could come right back down. But as you got at least minimum 50 pips up there, you know, congrats. I closed out 80% and I still have 20% running, okay? So now let's just focus on where this candle's closing, how it's closing, and continue to dissect gold for the next 15-20 minutes. We already did NASDAQ, and then, wow, okay? So NASDAQ, 24,007 James Bond, right up there, okay? So it drove, look at even NASDAQ pulled back to that red line right there, 50% of that candle, and just drove right through there, okay? We'll come back and we'll do NASDAQ and US30 in a moment, but let's focus on gold right now. What was my lot size? I used a zillion bazillion lot size, okay? I just made more money than Elon Musk. I am now a trillionaire due to that trade. I'm just joking. I made enough to buy myself 3 pancakes today from McDonald's. That's it. I'm a very humble trader. I just trade for pancakes. But guys, let's get serious now, okay? So this is a serious rejection wick. That's why, you know, I'm happy that I closed out 80% and my 20% runner got just tapped out at break even, okay? So, you know, I'm out of that trade now. Now it's time to focus on price action now, okay? So we escaped that zone. We can clean it up now. Let's get rid of our fishy right over here. And let's continue to watch this close, okay? So that's why, guys, you know, right away when I saw that bullish candle, I don't play games on news. I know there's some traders that wanted more and more and more, but that's it. It came right to the red box, right to a zone for a reason. As soon as it came in there, I told you guys, I'm closing out 80%, taking my rest, 20% at break even. Unfortunately, 20% got hit at break even, but I secured 80% up there, okay? So hopefully I broke that trade down to you guys. You know, unfortunately it was in drawdown, but, you know, I stuck with it. The news perfectly aligned with our analysis of a higher time frame area of support. Now, we have that rejection wick. Look, notice how the candle just opened again, bullish ignited. This is a large wick to fill, but with news and volume, it could possibly fill it. It would have been nice if it was like a short wick like this, then it would have filled it and popped to the upside. But this one has to continue to drive and drive and drive and drive before it can get up there, and it's right below the daily high. So you see how it came up and it's a lower high, and now sellers are pushing it down. Now, this is the game of volatility now, okay? So you got to be very careful now. Now we got to watch here. I'm not in a trade now. I'm a spectator again. Guys, thank you guys so much. We had 1,000 viewers on YouTube, so thank you guys. If you guys can hit the likes, we're only at 350 likes and we have almost 1,000 viewers on here. If you guys can step up the likes, we do appreciate it. Subscribe to the channel. Remember, our goal was 750 today. Oh wow, we're at a psychological level of 800. So let's get 84,800. If we can hit 85,000 today, oh my goodness, that's a big psychological level, and you will see Ron doing karaoke on Friday this week with you guys. Okay, so big bearish candle. Now we got volatility. So thank goodness, I got in and out of that trade. That's why, guys, stay disciplined, okay? Don't worry about what could have happened, what should have happened, what, this, that. Trade accordingly, right? Proper risk management is everything. Now I don't want to deal with this. Let the market deal with this volatility, and I can trade after. We can sit back for 5, 10, 15 minutes and watch this, okay? Yeah, you got to let the news settle, guys, okay? So the market is now taking this. Here we go. So we can start to see over here on Financial Juice, here's all these red alerts, the breaking news. So US PPI month over month actual negative 0.1 forecast from the positive 0.3, and the previous one was 0.9. So that is a big miss. US core PPI, remember core, excluding food and energy. Breaking US PPI year over year actual 2.6 from the forecast of 3.3. So not just monthly, look at year over year is going down. Okay, so the year over year actual number came out 2.6 from the forecast of 3.3. So short-term US interest rate futures tick up after PPI inflation data. Traders add to Fed rate cut bets. Okay, so we're trading into FOMC next week. So we got to put the pieces of the puzzle together. So short-term US interest rates futures tick up after PPI inflation data. Okay, so this is probably like a 100% given that the market during FOMC is going to drop 0.25%. But some analysts are saying even 0.5% now because US is struggling. They've been in a recession for over a year. I've been trying to say this, but a lot of people don't believe me. Because they base everything off of the stock market. Every time I have that conversation, when I said the U.S. is in a recession, the shrinking of the GDP, the loss of jobs, unemployment is increasing, inflation is increasing. You're not producing new jobs. You're not creating new jobs. You're actually at a negative. What do you think that's doing for your local economy? It's not very good. You add tariffs on top. You, the consumer, Americans are paying for those tariffs. It's not other countries are not paying for these tariffs. We are paying for these tariffs, right? So, the U.S. has been in a recession. It's just that the markets don't want to say the R word. They don't want to say that because it's not good. Right? So everyone says, well, when I was saying that, they were saying, well, Ron, markets are all-time highs. How can you say that? Stock market does not affect the local economy. Stock market is equities of corporations and billionaires and the elite top 500 companies in the entire United States. Those don't represent myself, yourself, and our neighbors, the average working person, right? Not a lot of traders or investors are in the stock market. They're working 80 hours a week and barely sleeping because they got 3 jobs to pay their bills. So guys, you got to understand that the stock markets do not reflect the local economy. Okay, so the local economy has been in a recession. It could get, now watch when they start to announce it, that could be signal trouble. Okay, if Basent and Haskett come out, Trump's appointees, and start saying we're in a recession rate, they'll never say that, right? They're going to blame everything on Biden and the previous administration. That's what they do. But guys, we got to really watch this going into FOMC, because it could be buy the rumors, sell the news event. A lot of traders think that when they decrease the interest rates, normally the markets do pump. But in this situation, the markets could sell off on that news. So this could be one of those buy the rumor, sell the news events. Okay. So markets could continue to drive to all-time highs. And then when FOMC, it could be a dump. So let's keep that in mind. Okay. Okay, so gold is just, hanging around here again. It's back in our consolidated zone. I'm going to get rid of these red lines now. They are irrelevant. We're going to watch our bigger green zone. So you can see it came all the way down. So remember, my previous stop loss was just right below there. So had I been in this trade still, I would have got stopped out, So thankfully, grabbed some money out and went to a break even. Okay, now I can watch. Sellers now are in control as the US dollar is rebounding off of that. Okay, so let's see, will it close below here? Will we be able to invert our zone green to red? Will it still be buyers accumulating in here and close back above strong again? But this is what we got going on for gold. I'll stick with gold for another 5-10 minutes, guys. And we've already done NASDAQ top down. I will do US 30, and it will take a little bit of a break, and then we'll be back for Wall Street, okay? And today's Wednesday, midweek Wednesday. So after today, when today's all said and done, when the markets are closed, review your daily candles, because there could be a midweek continuation or a midweek reversal. Remember when we've looked at gold in the past, it did a lot of Tuesday, Wednesday midweek reversals. So that could be also in the market as well. So what we got to do when the markets close is analyze that. Ahmed, can I do CGC canopy? I can. We can do that. That's the cannabis sector. No problem. My mic is not loud enough. Do you guys want me to start screaming here? I am loud in this room, to tell you the truth. I put soundproof walls so that I can shout and yell in here. Swear at the market makers without my kids listening to me. Am I already in? No, I was in. I took money out of that. And, I told you. I was in. Oh, maybe you just joined, but I was in, holding, and a little bit of drawdown into the news. As it came out right into the red box, I told you guys verbally, closing out 80%, left the rest with break even. Unfortunately, my break even got tapped out, but now I'm just watching what's going on. So the volume is still just trading in this green box, okay? So you can see, sellers are selling, buyers are accumulating. Will it close above or below? I don't want to engage in this volume right now. So I'm waiting on the sidelines. I got one win, so I don't want to just give back to the market right now. I want to watch what's going on. Carlos, welcome. Good morning. Classic New York open dump scenario. Today, Carlos, are you talking for today or are you talking for FOMC? Today, okay. Carlos, our bear in the group, is signaling maybe a sell at market open. So here's Carlos. Here he is. This is Carlos. A profile pic of Carlos. That one has too much hair. Reese, why is that good for indices if everything is not good for the producers? Is that what the question is? Because it could like when you have that where how for the producers, the US dollar is selling, okay, so a lot of selling pressure on the US dollar. Then when selling of the US dollar, think of an investor. When they sell the US dollar, where are they looking to put their money? What's the next best investment? Is it to put it in gold, Possibly. Is it to put it in the stock markets, equities? Possibly. So, you know, sometimes when the US dollar sells, they take that liquidity and move it into maybe the stock market, maybe into NASDAQ, maybe park it into tech. Maybe tech is going to go up, you know. So it's kind of like just moving the liquidity from one sector to the next sector, or one index to the next index, okay? This is where we might see Dow Jones sell off and maybe NASDAQ go up, you know, like because Dow Jones is more industrials. It has manufacturing, it's got oil and energy, it's got everything, big box retails. When you look at NASDAQ, it's basically all tech. So maybe you'll see US 30 go down and you see NASDAQ going up. Then you're asking yourself, why are these not correlated? Why is, if US 30 is going down, why is NASDAQ not going down? It could work vice versa also. Sometimes tech is selling off and then we see US 30 going up because market money could be coming out of tech and moving more into something more stable in the US economy, like industrials, oil and energy, big box retail stores. And then you see Dow moving up. So it's just moving money around, basically the US dollar. So if the US dollar is selling, they're selling for a reason, and then they're maybe buying stock securities or equities, something that will appreciate in value against the US dollar. Okay, because NASDAQ just made a new all-time high. That's what I was also talking about. Like they could be pumping the market because it's already baked in that they're going to drop the interest rates during FOMC. So this is what I was saying, Reese, where it could be one of those buy the rumor, sell the news events, where they're continuing to pump the markets right now to all-time highs, and then they're going to sell it off as soon as Powell says 25 or 50 point basis cut. That's when the market will sell off. Traditionally, that's when markets pump, but in this situation, we might see it sell off. So they're going to continue driving the markets as high as they can go, because when they drop it, then it's just a natural pullback and not really crashing the market. And then again, it will be buy the pullback and continue driving the markets after everything stabilizes after the FOMC. So kind of how markets move, you know, from time to time. It's just learning about these things, watching these things, okay? So sorry guys, on NASDAQ, this red box should be green right now. You know, if we come revisit this during Wall Street, maybe it might hold, might be a buy zone. Okay, so I'm gonna get rid of this red line, start cleaning up a little bit. So this is NASDAQ, we'll revisit, we'll do US 30 in just a moment. Gold is still in this green zone. I wouldn't be engaging in this right now if you're not, but I would be analyzing. It came down, came all the way back up. It came down, higher low. Look at that candle. Again, closed right there, and now they're pushing it right back down. So I have not seen a bearish body close below this daily point of interest as of yet on gold. If it does, then this green zone, if we can all flip it red, because it might represent sellers for the time being, we could continue to sell off on gold down to this yellow line. Mass signal. Do I know the 714 strategy? No, that's news to me. No idea. I don't know all these strategies. I can't keep up with all of these strategies. I'll be honest with you guys. No idea. Maybe I'm the only one on this call that's never heard of the 714 strategy. Maybe I'm an old man. I don't know what you guys are using these days. All these strategies. No clue what that is. I probably feel embarrassed saying this right now, because I might be the only one on the call that doesn't know what the hell the 714 strategy is. So are you setting me up to make me look stupid here? Or because I'm being straight up with you, I have no idea what the hell that is. I know what the 618 strategy is. 714, no idea. Is it a fib ratio? What is it? See, I'm showing you how old I am. I don't know what this is. Okay, gold, we might get our first body close below here. I know the pip and dip strategy, okay? I know that one very well. Grab your pips and dip out of these markets. Learn that strategy. That's the best strategy to learn. Pip and dip. It's a time-centered strategy. I don't know. They're making up new strategies, new names every day. I can't keep up with all of this. I told you guys, I'm an old school trader. I trade tape to tape, zone to zone, pip and dip, get my money and get the fuck out of these markets. That's my strategy. Okay, volume closed below, bearish. See what I just did with that green zone, okay? So the sellers are showing me they are stronger in the moment right now. So if the buyers, you know, buy this dip and come back in here, they could be now buying into a seller's block. So then it could traditionally continue to come back down. Now for buyers, we got to close back above here to flip the screen in order to come back up to the highest point of the day, okay? So right now, sellers are in control. Guys, I'm going to start getting off of gold right now, but just some key levels to watch for. I would target 36.40 right down here. Reason being is you can see how it held 5-minute support for a long time. Right there was a wick. It came back down, back up, came back down, back up. We built that trend line. So we've lost our trend line now and could be coming down. So I would be looking at short term 36.40, but if sellers can sell it down to 36.35, that could be a daily point of interest where maybe you could look to pick up and buy gold at that daily point of interest down there, okay? So right now, sellers won. So it looks like, you know, that news just moved gold right back up. So thankfully, you know, hopefully we grabbed some money and got out. And since then, it's been moving down. So we do have selling pressure in the market right now. It could definitely come right back up. But right now, sellers are in control of gold. So I just want to make this clear to everybody. I'm going to be getting off of gold. We spent good about 2 hours on gold this morning. So we're going to start to move over to our indices, more specifically NASDAQ and US30, okay? So I apologize, guys, but if you guys can monitor gold on your own, I'm sure you guys can do that. I'll flip-flop back to it, but for now, let's look at the indices. Val, have a great day. Enjoy your day today. Thank you for joining. I appreciate you. Thank you, guys. Okay, so this was just a recap. We did our analysis on NASDAQ. So we are trading, you know, in this all-time high supply zone. This orange line was the previous all-time high. Believe it or not, we just hit 24,007. James Bond is our new all-time high. So it broke that 24,000 psychological area, and it's coming down but holding still. So I'm going to let this kind of consolidate after this PPI news. We'll revisit this as we get closer to market open. But this zone is now green. So if it pulls back into here, what you could also do is the news candle, that big news candle, like look at the white line. That was my hourly white line. And you can see that it is right in that point of control of that news 5-minute candle. You can grab your Fibonacci tool again and go that entire news candle from the open close. And you see right there, the 0.5, I can bring this white line now, adjust it, bring it down to exactly 0.5 of that news candle. And I can find the pocket of control if it does pull back 618382 right there. So that's that strategy right there. You know, 714 strategy, no idea what it is. But this is the 618382 strategy. It's basically figuring out the golden zone of that big body candle. If it comes back in there, that could be where buyers are waiting to buy the pullback. You know, when that candle exploded out of here, maybe didn't have a chance to buy. Now traders are positioning themselves to buy right here at 23,953. If it comes all the way back in, could trigger those, and then that's a nice 50% discounted buy, and coming back into that point of control and then taking it back up, okay? And then you can see that that is also above this important green zone now, okay? So it is building a little bit, still strong depth of market, but we're trading in this all-time high supply zone, okay? So that's not all-time high, then tell me what it is. 24,007. On this chart, it is all-time high. Maybe you're trading in the futures, but that technically, so this is not the all-time high, 24,007. If I go to the monthly, let's look. Okay, look at the monthly. Okay, I'm starting over here, 2000. 2000.com era, there was the push, previous all-time high, 4,800. We scaled back. Look at the .com bubble burst, came back 2002, we consolidated. Look at, we came back and we took out the 2017. We've got above 5,000 new all-time high. So it moved all-time high. Here was COVID. If you guys remember the lockdown, we pulled back, higher low, continued to break 2020, all-time high, pull back. That was an all-time high 2021. We pulled back, held support at 10,000. We continued to push 2024. And to me, it looks like we're trading at all-time high. If you look at all of these are monthly candles, not 5-minute candles. Right there. That is all-time high. Okay? I don't know what you're looking at. Right there. Maybe I said, if you're looking at the futures, yes, futures trade different. This is Forex right here. But on this chart, that is all-time high. Okay? We got to get focused, guys. We got to get focused. Okay? So that technically 24,007 on this chart from FXCM is all-time high. Maybe you have other charts or you're trading futures. Futures is not Forex trading, guys, okay? Just basics of trading. Okay, let's get focused. Let's go back to Dow Jones now. Let's all breathe and get back to Dow Jones, okay? So we're going to look at Dow now. We're going to do an analysis. There was Dow on news, big pump, pullback into 50%. Maybe you're already trading it. I'm not, okay? So I'm going to start off on the daily. I know it's boring. Nobody wants to see a daily analysis, but unfortunately, I don't trade without doing a daily analysis, okay? So I do a top down. This is what we got. All-time high on Dow up there. 45,777 is an all-time high, according to this chart. Okay, so right over here, that was a previous all-time high, December 2024. I'm making it red. Coming back, it tested previous all-time high this year, February of 2025. Push down, one top, two top, M top, drop. Go across into the future. We came in here a third time, July this year, drop. We came in again, end of July, early August, drop. We came in here again, couple impulse breaks, no volume close above. Finally, we had Symposium, the conference over here, and Powell was speaking day 2. He hinted interest rates. He was very dovish on his speech, and we had a nice big bullish all-time high candle break out of there. Physically close above this red zone. So now that zone turns green, stretching into the future. I can already see we came in here September 2nd, September 3rd, and we're continuing to move. So it's moving, guys, back up to all-time highs, okay? Now, let's see what's going on. I'm not going to dissect everything below us, okay? We're moving away from that now. Now, right there, maybe draw a yellow line right at that wick. That's right at 50%, exactly right in there. You can even place an alert for the future. If it ever comes back in there, you might be going fishing in that time, okay? So, there could be a couple fish still swimming down in here. Not these big tunas, but there is some fish still swimming in there. Will they ever come back down in here and grab these fish? Maybe. It might hook them up. It might go back up, okay? What if it hooks one of these fish and it kind of snags it? It's one of those, or it's one of those, what do you call those bottom feeder fish that are not good to eat and they're just suckers, or carp, those ones, those bottom feeders. It could be you hook up one of those. It's not one of those prize fishes. So that's, maybe you hook one of those and then it drags you down in here. Catfish, yeah, Sherry, it's one of those catfish. You hook one up and then it takes you back down in there, and then you're now where all these bottom feeders are, all these catfish, carp, and suckers, and then you turn it back, you flip the zone, now you got caught where all of these bottom feeders are, and then they start dragging you down, right? So we got to find the good fish. We got to find, the lake trout, the pickerel, the walleyes, the salmon, those good ones we can eat. But if we hook up like a carp, a sucker, a catfish, a grouper, no, what are they called? Those, I don't even know. But those ones that we're catch and release, just throw them back, okay? So, but they're in there. We don't know what type of fish are in there, okay? That's why you got to have a really good depth of market, fish finder. Or tuna fish are the best. I love tuna. I could eat tuna fish every single day, 3 times a day. I used to. When I used to compete, I used to eat so much tuna. Man, I miss those days. I got to get back onto it. I know it's got a lot of mercury levels and things like that, but you only live once, right? You want to eat healthy, and then people say, oh, you don't eat that, it's got mercury. So how do you eat healthy these days? What do you guys do? Points of interest right here. So this big push, Powell closed right there. It was selling pressure coming back up, impulse, 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 impulse yesterday, close. Again, now we're closing above this. We're pushing above this. Okay, so one other location was Big Powell's announcement candle right here. Okay, so I know it's lower than where we are trading at right now, but just to acknowledge and get in the habit of doing this, guys, that was a big bullish candle that closed above there. Maybe find that point of control of that candle. Again, 618, 382 respectively. And then you can see how we're still holding that zone. We haven't came deep down into where these fish are down in here, but it came in here and there was some fish in here. It came in here, higher low, came in, higher low, came in back down yesterday, higher low, even today, higher low. And we broke for a new all-time high. So this could continue to go up today. I think maybe they'll sell it off during FOMC, okay? But right now, very, very bullish still, okay? Now what we got to do is start to just look at yesterday's volume, points of interest. Where did we close the previous day? Where did we open yesterday? Right there, came down, higher low, came back to the opening price. We broke out. Look at those tweezer top highs at that previous all-time high. 3 highs, that high, that high, and that high are all basically equal at 45,765. And today we just pierced above it, getting to 777. So new all-time high. Now let's follow, today's daily candle. So right here, we closed yesterday, we opened. It was initially bearish. Where we came down, we printed the low of the day is right there, purple line. We continued to come right back up to the opening price, and buyers flipped the candle, bullish, 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 bullish. We just made a new all-time high on this chart right there. So there's an orange line representing our all-time high and Donald Trump's makeup. 45,777 right there, okay? Now we see it's getting rejected, coming back down, coming back down, coming back down. So we kind of got a spin top candle with a little bit of bullish volume on the daily. Will it come all the way back to the opening price and opening buyers push it back up during Wall Street? Or is it going to start to, sell back down to the opening price, then Wall Street comes back down with sellers to the lowest point of the day and start dropping, okay? So that's what we got to watch for. Also, if you're a daily trader, wait and you're watching these daily candles close, watch and see where the volume will close. Well, because I see an impulse, impulse wick, impulse wick, impulse, impulse, impulse. Is today going to be the first daily candle that closes above this yellow line? Or is it going to be another impulse candle that gets rejected and we're closing back below here and then triggering off maybe selling for CPI tomorrow and maybe going into Friday, okay? So, but right now we still have bullish volume. We got to acknowledge that, okay? Another thing now, let's go to the 4 hour. If we come back to the all-time high in new charted territory, where could we go? So 777, yes, 800, you could go to 800, but more specifically, maybe 900. Go maybe 100 points up to 900. Mark up 900 right there with a yellow line, daily point of interest. Then your nice whole psychological number is 46,000, okay? So 46,000, you could go 25 points above 46,025 and bring it down 45,975, like just those, giving it those 25 point buffer right there, and then draw that block into the future and make it red. That could be a supply block positioning itself in the market around 46,000 plus 25 points minus 25 points. So do you guys understand? 46,025, the exact is 46,000, then 25 points below is 45,975. So that could be a block in the market, okay? But right now, let's dissect today's daily candle into the 4 hour. I know it's right after 9 a.m., so we got to start moving. Our 4 hour candles, moved up, came back down, moved up, double top. They dropped it back down, a little deeper, took out that bigger fish, good salmon, trout, and pickerel inside here. Also perch. Perch are great to eat. Good perch in there. We caught them all. It came back up. Again, we're struggling up here. Came up 3 tops now, triple top. Came back down, but now it's building higher lows off of here. That's considered a double bottom right there. Pulled back into 50% of that 4 hour body, right? That's a big body candle, closed above structure. Had you figured out 50% of that, you could have maybe got triggered and had a pending order and right into the money, okay? Again, this big bullish candle, again, again, we're now trading, you know, relative to about 50% into it where the bodies are right now. So look at our bodies. Now I see how we were trading here, more specifically the volume coming from Europe. This is London market open and everything that represents Europe here, the 4-hour candle from 2 to 6 a.m. So we opened, it was bullish, came back down basically to the lowest point of the day and closed with a little bit of bearish volume. Now this one, 6 to 10 a.m. This 4-hour candle is closing in 55 minutes. Look at, we had very little drawdown. It's engulfing, came all the way up. The news hit the all-time high, and since then we're retracing back down. Here's bodies on the 4-hour. Let's place you could do a yellow line or a white line. Whatever floats your boat, do whatever you like. I do white for myself personally because anytime I'm dissecting 4H, 2H, 1H, anything to do with an hour is white line. So that's what I have. Anything to do with a daily is a yellow line, right? So I can see now there was a body and a body. So I see we broke above it, but the volume is below this. Will the buyers continue to get and close above 45,715 in order to continue to push up to that all-time high and break out? Or is this going to start to be resistance now and start to push us down? So let's keep an eye on this white line as we go into Wall Street, okay? Because it might play a factor. If the sellers absorb all of our buying volume on this 4-hour candle, it could flip and turn bearish, and then all we're doing is filling the European 4-hour wick, and there's the low of the day, and we could be naturally dropping. Right there, I would mark right there. There's 50% of that 4-hour candle and that wick. I would have another white line for support right down here. And look at the number, 45,425, nice psychological number. So if it breaks down there and comes down, fills, it could be equal bottom lows right there, or just a little tad bit lower low and come right back up before it gets back into this green zone down in there, okay? So we are technically still holding good bullish volume, but we got rejected at that all-time high during the PPI news, so we'll see how everything goes into Wall Street. Here's now another look on the 1 hour. So I'm dissecting daily, cutting the 4-hour candles, cutting now into 1 hour. So now more specifically, I can see hourly. This was noon yesterday, how it was trading. There's 1 p.m. There's 2 p.m. There's power hour. There's the close of the market. Here's where the futures opened up, 8 p.m. I can see now 9 p.m., 10 p.m., 11. There's midnight my time. Here's 1 a.m., 2 a.m. I can see London right there. Then I can see 4 a.m. It was a bearish candle coming down. Now I can see pinpoint 5 a.m. is when we made the low of the day. And we came back up 6 a.m., little consolidation. Here was the big news, PPI, higher low, continue to push up. That's what it created, got right through there. That was the new all-time high and got rejected. And you see how now the hourly volume is below this white line. So remember I placed it on that 4-hour candle, but you can see how the hourly candle closed right there. You can see that hourly candle push and close below it. You can see the spin top hourly candle close below it. So I don't have any hourly volume closing above this white line in order to push up. So this is where this could be basically a double top on the hourly. Look what I see, guys. See where it came up? Yes, there's wicks above me, but I'm looking where the white line is, the volume. Came back down. Neckline is either right here. I would go more with the neckline being the lowest point of the day. And then coming right back up. You see, yes, there was that impulse break for that, but look at where the volume is. Again, right by the white line. So this could be like a double top, starting to come down. But it could also, continue to go back up, okay? So that's why I said, we really have to watch this white line and what they do here. If it drops down, we got to look at this yellow line as a daily point of interest. You could put it at 50% of that previous hourly candle and do what you want. I'm going to keep it on a daily because it's positioned there on a daily due to its higher time frame nature, okay? So if I'm looking for hourly points, if I'm in a sell, maybe it drops down to that body. I can see a wick holding, maybe like right around there, 45,600 level, okay? But right now, I really want to focus on what will happen above here. Will it push out, maybe grab some liquidity and dump it? Like how Carlos is saying, maybe market open will drop. I see it too, Carlos. Let's see on the 5 minutes what we got going on, okay? So what were we doing prior to the news? It came up right up to here. They pushed it right back down, slowly came right back up, pulled back, still holding. Then we had this big, massive news came out, okay? Even if you're trading that 5-minute candle, you can find exactly where 50% is by cutting it in half. Or if you don't like the cutting approach, grab your Fibonacci tool and let's just see. The opening balance was a bullish ignited open. It closed right there. I can see how high it went. But if I'm looking just at 50%, this is where I start using my cut lines, my red cut line. Look at the 0.5. It's like right there, almost at that wick. If you don't exactly get it, grab your zone right there. right? So now we can see it traded basically in the pullback zone, stretch it into the future, and currently we're still holding this. Okay, so you see it pulled back. Is it going to now take its next leg, drive back up, or is it going to dump back down, right? If we lose this, we flip it, we're dropping. We're dropping possibly back down to the lowest point of the day and maybe break even lower. That's why I have that yellow line for protection right there to watch it. Maybe it comes down there and flips right back up. So that's why I pay attention to the yellow lines, okay? And also this white line. If I'm just looking for a small time scalp, again, just on the 5-minute bars, just looking for volume to close above that white line, maybe retest this, could be hourly support from resistance, and then drive up. I'm not looking to take it up to the all-time high and go up here. As a scalper, I'm just looking to take it up to these bodies. I measure the move. Is it worthwhile trading it from the white line to the red line? I measure it. If I can't do the math from 717 to 742, I got to go back and do my grade 3 math. But if I can't do that, I measure 25 pips, right? So I know, just coming up there. If it fills back up to that previous all-time high, I know it's 60 pips. You know, so it's measuring your zones, knowing exactly what you're looking for. Then when I know that, I know how much to risk on the trade. I know how much to place my stop loss, things like that. Okay, so this is what we got going on for US 30. We are 20 minutes away from market open. It just pulled back into that bullish pocket of the news. And we'll see what happens, guys. Okay, so that orange line is the all-time high right there. Let's add our SST daily bar indicator showing opening price. We sold off to the lowest point right there and came right back up to the opening point. Big bullish. Most of that bullish volume was considerably on that 5-minute news, and it came up. We hit the highest point of the day, also all-time high, new all-time high, and got rejected. And this is where the volume is trading right now. Adding 9 EMA, we're above the 9 EMA. The 200 is right here, getting maybe possibly lined up with the opening balance price. Okay, so that is US 30, guys. We'll leave this over here on the left side, right here, US 30. We've got NASDAQ looking basically same thing, retested right in 50% and moving out of there. Okay, so we'll keep an eye on all of these. I'm going to get rid of this big red zone because I don't want it to confuse us. Okay, just want to watch it exactly like this. We got these two side by side. Here is our gold. Wow, gold is just real choppy. See how it came down to that red line, guys? Right down there and bounced off of it. I would stay away from gold right now. This is really, really choppy price action. Let it consolidate. Let it, figure out where it wants to go. Don't engage in this type of trading. It's very tough. Look at all the wicks. You got big wicks above, big wicks below, big wicks below, big wick. It's just very erratic is the word I'd like to use for this. If you feel comfortable trading this, I would lower your risk. This is not the greatest to be trading. Okay, let's focus on our NASDAQ and US 30. Again, just real quick, do we have any news? We went over this morning, but for those that are just joining us, we do not have any 9:30 news. We got some 10 a.m. final wholesale inventories. I don't think that that's going to really impact the markets, but for other traders that do look at these folders, keep an eye on it. Crude oil, we do have our weekly inventories coming at 10:30, and then our 10-year bond auction at 1 p.m. this afternoon, okay? And then markets will close, and then we pick up tomorrow. Tomorrow's another high impact day, guys. Look at, we have a lot of European folders. So Europe has basically their FOMC tomorrow. Main refinancing rate and their monetary policy looks like they're pausing their forecast. No rate cuts or increases. Looks like it's going to be a pause of 2.15%. Then we get into 8:30. We had PPI today. Tomorrow's the opposite. CPI, Consumer Price Index. Okay, so we'll have a CPI month over month, core excluding and CPI and year over year, our weekly unemployment claims. And then at 8:45, you have the ECB press conference. It's basically like where Powell comes to the podium but in Europe, and they speak about the results of this and give forward guidance. And also tomorrow in the afternoon, we have our 30-year bond auction. Okay, that's all going on. We don't have any earnings to talk about today. And guys, just heads up, if you're on YouTube, there's a free Telegram channel pinned at the top of the channel for you guys. It's everything we do here at SST. It's available for you guys. Our YouTube links, our shout outs to you guys in the chat. You get shout outs, everything, guys. Thank you guys so much. We appreciate you guys. free blogs. This is the Producer Price Index blog. Post New York after me. Dave steps in Tuesday, Wednesday, Thursday with the private snipers and catching some pips over there and analyzing using the Scalper Pro and doing some other things that I don't do on these calls because I can only do so much. Then Dave takes over and does the rest. Okay. And if you want to join the team, guys, love to have you. Lots of education, blogs available for everybody. Please, guys, if you can read these blogs, takes 5 minutes out of your day. You'll learn something new. You know, if you read Producer Price Index, at least now you know what PPI stands for. So I didn't know what PPI stood for back in the day. No idea. Now I know what it is. Okay. And guys, again, just if you can leave us a like, we do appreciate it. And amazing. You got us above that psychological level, 84,800. Thank you guys so much. We're well on our way to 85K. Look at us. We are trending up like NASDAQ, creating these higher highs. You're getting SST very, very bullish to continue to be here on a daily basis and help educate you guys, help educate the entire world. Hopefully YouTube doesn't ban us. You know, we've had multiple strikes. I do say some silly things on these calls, but I want to exercise free speech as much as I can, say whatever I like. I know YouTube they censor a few things, but you know, we are our own, we're not, you know, like, I don't know how to say it. Someone said, Ron, be careful, they'll cancel you. I can't be canceled. I'm like, I don't rely on YouTube. I don't have a sponsor that I got to watch what I say. I'm my own person. If you cancel me, yes, you can cancel me off of YouTube, but you can't cancel me as a person. I don't, you know, I do my own daily trading. I'm not here working for anybody. Do you know what I mean? So yes, you can cancel the YouTube, but you can't cancel me. You can't cancel the Zoom. You can't cancel the Discord. I'll come to your house. You can come to my house. You can't cancel me. I'll teach you how to trade. I'll figure out a way to teach you guys how to trade. But I'm one of those persons, you can't cancel me. Someone said, Ron, you got to watch what you say. I really don't give a shit what I say, you know, because I'm very truthful and I mean what I say, guys. So I'm different than other streamers out there. I'm not scared to say anything, okay? I know I got to be careful with the YouTube because I do say some things. You know what I figured out, guys? I got a strike the other day, okay? And YouTube got back to me. You know what it was? Someone in the chat asked me, Ron, are you a Jew? And I said, hell no, I'm not a Jew, okay? And that's what got me the strike. Why? You asked me a question if I'm a Jew, and I said, no, I'm not a Jew. And that got me a strike for just saying the word Jew, okay? But you asked me that question, and that's why YouTube gave me a strike. So I had to reply to them. I had to show them a snapshot of the chat where the question was asked and my reply. Then they reviewed it and then they took that strike away. But that's why I got a strike. I figured it out and I got through with YouTube just by saying that. You know, I had no idea. I thought I said something about Powell. I thought I said something about Trump. I thought I said, you know, I had no idea, but that's what it was right there. Okay. It boggles my mind. So they'll probably cancel. Watch, they'll probably get a strike because they heard that key word right there. But I don't care. I'm telling you the truth. I am not a Jew. I don't follow Judaism. I'm not Israeli. I'm an Albanian Muslim. Okay? So let's make that shit clear for YouTube. Not for you guys, but for YouTube. Okay? So I'm making this clear for YouTube, not for you guys. Okay? Just want to make that clear for YouTube. Because YouTube is the one that's making me watch what I say when I'm just answering your questions in the chat. Okay, so guys, I'm going to take a quick 3-minute break. I'm just going to go grab a drink, go to the washroom real quick, and I will be right back. Guys, we have 600 viewers. Don't leave. You're still here. I will be back in 3 minutes, and we'll get ready for Wall Street. So just a quick little break, guys, and I will be right back. Thank you, guys. Okay, everyone, we're back. We're back. Okay, so let's get watching over here. Okay, so nice little return on US30 coming out of here, right back to that point of interest. Let's see what they're doing. Okay, so remember, these orange lines are all-time highs on these charts, FXCM. If you guys are trading futures, again, it's probably, you guys have different numbers, but maybe candlestick patterns are probably the same, okay? So let's get ready, guys. Again, I'm going to remind everyone, please, if you can, trade with proper risk management. I cannot stress the importance of this, okay? Double check. Now, just like me, I was trading gold prior. So with my broker, if I switch to either NASDAQ, US30, S&P 500, they're different sizing. So I need to now look at the spreads, make sure now my sizing is appropriate for market open. Okay, let's all do this. Let's get in the habit of doing this. I always remind you guys, because we always have one or two traders on every single session that, you know, make a critical mental mistake. And this is an easy mistake that we can fix. We can fix it right now. You know, whenever anyone says, man, how can I fix that? Right now. Let's all double check, guys, okay? Just, you know, ego has nothing to do with this. Doesn't matter. I've been trading over 25 years, and I still check every single time I take a trade, because Ron smokes a lot of weed and tends to forget some things once in a while, okay? So let's get in the habit. Right now, I've checked, so I'm good. I want to make sure you guys are good. I'm on US30 now. I had to change my sizing from gold now to US30. Why? Because it's a completely different security. It's a completely different index, brokers, prop firms, everything. They have different kind of sizing. So make sure you get familiar with yours on what you're trading, your platform, okay? And let's watch now, okay? So what are they doing? It looks like maybe, are they developing a second top ready to drop this, right? Remember what Carlos was saying? Maybe it's going to be a dump. Maybe are they going to take out another, another all-time high? Like, for example, will it come out of there, drive, and then, you know, come back down and the market drives down? Possibly. Or it could just continue driving, making new all-time highs, pulling back. More buyers are positioning themselves, and it keeps going, okay? We can't really fight the trend right now because the trend is bullish right now. If it is making higher highs, higher lows, higher highs, higher lows. And I remember yesterday's session, Wall Street was very choppy, was extremely choppy. Like, I can go back to yesterday and Wall Street yesterday. Remember when we were trading it, how choppy it was? And I just want to show you guys, coming out of Wall Street, how there could be good volume trading after. Okay, this was us yesterday, remember? This was 925. Look at 930, how it opened. Do you guys see right in here? This big candle right here. This was 930 yesterday. Came up, came down. Then the next one came back up, came back down. This one came down, back up, right? This one came down here, 945. Then it came down. Then look at bullish engulfing, come all the way back up. Then it came back down. Then it built its way back up. Then it dropped. Then it found nice support. Then look at after it continued to drive out of here, okay? So this was tough to trade yesterday. We might get the same situation today. Hopefully not. Hopefully we get cleaner price action, at least to help with analysis and things like that. But with all cases, we don't know what type of volume we're going to get in this open session. All we can do is, again, I remind you to manage your risk, okay? You should already be knowing how much you're going to risk, how many trades are you going to take, all of these things. You got to factor, you got to have some sort of trading plan every single day, right? You can't just go trade blind and just hope for the best. That's not a plan. You're not going to, you might have a good day by trading with no plan, but to do it consistently every single day, the odds are stacked against you. So you got to have some sort of trading plan. You got to have some sort of discipline. You got to have some sort of patience. Right now, again, ask yourself, are you going to trade the first 10 seconds of market open? It could be just like news. You know, like with the news, first 10 seconds, it was just a bullish candle, right? This could be just a bearish candle that drops. Are you just going to hit the sell button as soon as you see that? Because sometimes it goes down, catches a wick, and comes right back up and reverses. So you gotta, if you're going to go for like one of those sells, you got to have some sort of background bias. Why do you assume that the market is just going to sell right off the hop? Like, You can't just guess. You got to actually go with the flow. So I'm telling you guys again, I will tell you guys if I'm going to scalp the right at market open. If I do that on a call, I'm going to tell you guys, I'm going to the 1 minutes and we're going to watch 929, 930, 931, 932 minute by minute, and I'll scalp those. But I want to give you guys a lot of notice to know that that will be an education session, because I don't want to be you guys doing something silly or crazy, okay? But right now, I'm going to focus on the 5 minutes. Listen, and please, everyone, pay attention on Zoom and on YouTube, okay? Because sometimes on Zoom, we had traders that didn't hear me. So I want everyone to hear me clearly. I am waiting for the first 5-minute candle to close, regardless of what happens. If it's a huge bullish candle or it's a big bearish candle, whatever it is, or it's a spin top and indecision, I'm waiting like yesterday. First 5 minutes. I know, yes, I admit I might miss out on a trade on market open, and that's fine, okay? No problem. If you want to give me an X or unsubscribe from the channel because Ron is not trading, gambling right at the market open, that's fine. I don't need you here. I want more serious traders that want to learn and learn patience. You don't need to trade the first 5 minutes of the market open. You can wait 10 minutes. You can wait for a full 15-minute bar. You can wait till 10 a.m. and trade after, okay? You might even, if you wait, you might avoid trading all that garbage that we traded yesterday, and you might have good, clean volume to trade after, okay? So that's, I'm just saying, I'm putting it out there. You guys do what you want during market open. I'm just telling you guys what's good practice. I know nobody listens to me. I'm like one of those, you know, those parents that tell the kids, don't do this, and then the kids just go and do it, right? I was that kid too. My mom told me growing up, don't touch the oven when she was cooking, like she was cooking, baking in there. Don't touch it. Me, I would go like with my face and my hands and, you know, go test it with my face and burn my face. And my mom was saying like, man, what's wrong with this kid? But that was me. I had to learn my lesson the hard way. I had to burn my face. That's how I learned my lesson. And then I learned next time, maybe it's not a good idea to go put your face on a hot oven, okay? That's how crazy I was as a kid. So let's not do this with the market open. But if you learn the hard way, if you go in for example, if you go over leveraged in a sell and it's a big bullish ignited candle breaking out for a new all-time high, and you blow up your account, or you lose your prop firm, or you get back all of last month's gains, don't be mad don't be mad at the market. The market did nothing. The market is moving the way how it wants to move. You were the one that recklessly traded that. You were at fault. Don't blame anybody. Don't blame me. Don't blame your neighbor. Don't blame your cousin. Don't blame Powell. Don't blame Trump. Don't blame the markets. You're the only one to blame. Why did you do that? Same with me. When I did that, I used to say, oh, it was the markets, this, that. Then I realized, no, it's not the markets. The markets don't care. The markets are going to move whether I'm trading it or not, just like you. The market knows where it wants to go. We're just liquidity for the markets. Again, we're just, you know where I place those fish? We're little tiny minnows. We're little like shrimp, you know, like in there. Us, we're not moving any markets, guys. We just got to follow what they're doing, okay? So right now, let's follow. US30 is a big bearish candle coming down right into the close. Here we go. There's the close, flip zone. Green. So in my 5 minutes, while I'm waiting, I'm doing all of my analysis. Like, see how I flipped the zone? Okay, came in there. If you got a quick little sell, great. You know, if you're in it, fantastic. But now let's watch. It just took out that low. There's the lowest point of the day. Will it come all the way down there? Will it return back up? NASDAQ, there's that M break, okay? So for all of you guys that said market will sell at open, you guys are absolutely correct. Market is selling at market open. You guys are 100% correct. But let's see now, for us that are waiting to see where the body will close, how low will it go? Will it take out today's daily low? Will it just come down here and come right back up? Those things that we're looking at. This is the first 45 seconds of market open, okay? So far I see clean volume. Like NASDAQ is a big bearish ignited candle pushing down. That looks clean. I don't see too much whipsaw action. Steve, you stuck your finger in the car cigarette lighter. Man, that's funny. You know, I did the same thing too. I did it just yesterday. Not when I was a kid. I did it yesterday. I learned my lesson, Steve. To all the adults out there, don't stick your fingers in your car lighters. And don't put your tongue in there as well. Don't put your tongue in your car lighter. Okay, will this volume close below this daily yellow line? Will it close above it? Okay, so we came down, we came down, we came down. We took out that low, okay, right here, like a 5-minute low, that previous 5-minute low. So technically it is a liquidity grab, but we didn't take out the higher time frame daily low, okay? So nice return coming back up, back into now our point of control. Remember I flipped it red. The reason why I flipped it red was because 925 candle did technically close below. So now it's coming in there. Now see how it got rejected. So it got rejected out of there. Some traders right now will take a sell on the rejection and push down, okay? But like I said, I'm waiting for the full 5-minute candle to close. Unfortunately, I got to wait another 2.5 minutes. I know now we're right back to the opening price. So look at the daily candle. It's exactly how yesterday was. It was this daily spin top, and it was playing around with the opening price. NASDAQ looks a little bit more cleaner, like it's pushing down. Let's see if it will get down to 200 EMA or that daily point of interest down at 23,890. Okay, but that was like a double top. You know, get to know your patterns too, okay? You know, one top right there, neckline, second top. There's the M that closed below, a retest, and the next push down. That's what we look for when we're selling, okay? But also, will it close below this red line? Then we might have further push to take out today's daily low. However, it could return back up. I will only look for buys, basically, if we can get back above this red zone to continue to push up there. Otherwise, this is still a red zone holding. So then maybe my bias is to continue to sell with this volume. Okay, we got another minute and 10 seconds to go into the close. So you see now how sellers have momentarily taken control of the daily candle below the opening balance price. Okay, so see how the candle flipped now, bearish. NASDAQ still has a lot of blue volume still left in it on the daily. Okay, so with this red line, I'm just going to go backwards to see how it was resistance right there. Then we dropped right there to that lowest point at 5 a.m. and we came right back up. Now watch this closing bar, okay? 40 seconds to go into the close. Is anyone in a trade right now? I know Carlos is in a sell. Is anyone else in a trade right now? Gold long from Discord, I saw that 46. Guys, we have a gold Discord signal at 46. You know, it's running 50 pips in profit right now. You know, so it came bottomed out at 40, came back up. There's that 46 daily yellow line and pushing up. So if you guys caught that on the Discord signal, congrats, guys. Right over here. So the long buy that was released at that daily yellow line right there, 3646. Okay, so when I look at it now, we're trading at 51. It's running approximately 40 pips. There's that 3646 yellow daily point of interest. So it came down, volume closed above, and pushing out. Okay, if you got it, congrats. But now let's see. So we closed right there, first 5-minute candle at the red line. Now we're coming back up. So let's see now, retesting either the yellow or back into that red zone right here. Okay, and also NASDAQ, guys, closed below that green zone from the news. So go red for NASDAQ as well. Okay. It broke down holding this bigger zone, but that news candle point of control could be still red. Okay, so now we're back right back up to the opening price. The daily candle is like a lot of indecision. Okay, so it's coming right back up bullish, but let's see how we interact in this zone up here. Can the buyers close it back strong above here? Are we going to push for one more leg up, or are they going to continue sellers to absorb, offer, and push this move down? Now you got NASDAQ coming in to retest that news zone right here. Is everyone still okay? No, I'm not. I haven't entertained the trade yet. Okay, still watching. Okay, so NASDAQ got rejected. Let's see if it breaks here. I might look to take that shooting star candle to fill that wick and drop even further down. Okay, so it came down, coming back up. I personally like trading, US 30 over NASDAQ. That's my personal opinion. But could look to continue to short this down. We could wait for that candle to close, but you got to wait again another 3 more minutes. You could go down to the singles if you like and watch the single 1 minute bars. So these are the single 1 minute bars. So I can see how it came down, back up. Right here, this 1 minute candle on both of these is going to close in 42 seconds. So I can watch where these 1 minute candles close, or you can just enter on an impulse, okay? You can if you like, or just wait another 30 seconds, okay? But this is New York volume, so it moves traditionally a little faster than normal 1 minute candles, okay? So let's just see, will it close back below that red line? It impulsively broke back up, right there, impulse, big bullish candle printed, but then it came right back down again to that red line and pushed back up. Here's the closing price. I'm on the 1 minutes, the singles right now, okay? So it didn't close below that red line. So I know that the 5 minute candle has a wick right now, picking up. So again, if I go back to the 5, see the 5 is this inverted hammer candle, continuing to hold with 2 minutes to go. So can they push this down and start targeting that lowest point of the day, or the buyer's going to continue to hold this and bring it back up? We could get some consolidation. That's fine if the market wants to consolidate. That's what I was saying. If you want to take that impulse break on NASDAQ dropping, I was going to take it too, but I didn't. Then I started looking at US 30. But 5 minute candle, 90 seconds. Let's watch the close. If it closes below here, then that green zone is going to go red. And then even if it pulls back in there, it could be sellers. Bigger sellers could be in here. And market could continue to be bearish and push down. Maybe target the opening price of NASDAQ or the lowest point down here. We'll see if US 30 continues to break the low of the day. But still holding bullish volume. So that's why sometimes it's good to stay on the 5 minute candles, wait for full closure. We got 50 seconds, so it was coming back up. Now they really pushed it down. So if you want to really go into the 1 minute, now you see how it's barcoding, bearish, bullish. We got an engulfing 1 minute bar coming down, closing in 40 seconds. This one you could maybe, if you want to take like an impulse, the way how it's going, lower high, lower high, lower high, ignited bottom, could break and push down to that lowest point of the day. However, if you want, wait for it to close. Wait for, even be patient for 20 more seconds, okay, to get that full confirmed close. And then the 5 minute candle is doing this. It now flipped into a shooting star. Get ready, because it could close below there, turn ignited, and just push. There's the shooting star breaking, okay? So here's now the close, closing right below that red line. Get ready. Oh, down right at the low, they pushed it. So it got a wick. You see how it got the wick and it printed back up? So if this thing kind of turns back down, it could definitely trigger that lowest point of day, or it could come back to retest the red line. First retest is the red line, okay? So it went above it. Now maybe it wants to come a little higher. Where? Could be from the yellow to the red line. Where's half of that retest? Could be like right around there, okay? So it is a bullish candle coming back up. Are they going to push this thing down? Okay, as soon as it pushes down. NASDAQ, guys, did you go green to red? Did you change the color of that zone? If you're in a short on NASDAQ, there's that 200 EMA and the yellow daily line, okay? That could be a point of interest if it comes down there. Okay, so good rejection at that 50%. Let's see if they can get that volume back below that red line. Okay. Okay, I'm going to go into sell. I like that return push down. I'm going to place my stop loss above that daily, I'm going to give it room to breathe today, okay? So I want to be inside that red zone, and then I'm going to look to take out today's daily low and come down to that yellow line. So I'm giving it more room to breathe today because I'm looking to take out today's daily low. So in case it wants to come up, I want to give it room to breathe. I don't kind of want to get stopped out right there or right there. So I'm in this on a sell. There's the shooting star candle pushing down, okay? So it's in profit right now. If we come down to the daily low, that's about 30 to 35 pips just to tap into that purple line, okay? And then if we can break it, we're looking about halfway break to about 50 to 55 pips, and then total target next daily could be about 70 to 80 pips down there, okay? So it's a quick move. It turned into a shooting star candle, but we got the lower lows, lower highs activated. So could we continue to build a red zone like right here? Okay, so I'm going to sell on US30, guys. Stop loss is a little larger than usual. I'm giving it more room to breathe because I'm looking for a bigger move. But if we can start taking out that daily low, I'm going to start reducing my stop coming down, okay? So we got half to go, 2.5 more minutes to go. NASDAQ is pushing down nicely, maybe getting down to those points of interest. Again, let's see if we can take out today's lowest point. We got a beautiful flip on the daily candle. During Wall Street, they flipped it. So guys, again, if it comes down to that purple line, that's 30, 35 pips, you can naturally reduce your risk or do 80, 20, 50, 50, whatever you like, okay? Okay, right there. We tapped into it, okay? Please, guys, you know, if you want, you're welcome to do something there. But you see how we came down? Exactly. We never broke the lowest point. So got a wick coming back up. So again, can we offer and bring it back down? Try one more time to break that low wick. Will it do it on this candle or not? Okay, because this could now flip back up and turn back up. So then put me in drawdown, okay? So, but again, I'm waiting for the candle bar to close, right? So I can still see those buyers that came in, a lot of offers. So we're falling on maybe a higher time frame, maybe going into a 15-minute bar. So if you look at your 15, we got a beautiful 15-minute candle that closed below, retested, dropping. So can our 15-minute candle, I know there's a lot of 15-minute traders out there. Look at, we're testing the equal bottom low, the lowest point from 5 a.m. Eastern. So can our 15-minute candle close with some volume below here in the next 60 seconds in order to continue to push down, okay? So that's going to be real critical watching this close right now in the next 1 minute, okay? So we're coming back down to reattempt to break this. Man, holding strong at the lowest point of the day. Oh, wow. Okay, so we got a spin top candle with indecision, holding the lowest point. So sellers could not break that lowest point, man, as of yet, okay? So will it continue to close with some bearish volume, try one more bar coming down, or is it time now that the market is going to start to rotate back up? And then it's got to come into more offers, and then hopefully sellers have bigger offers, and then to take it back down to take out that low of the day. I didn't lower my risk during down there, okay? So maybe that was my fault down there, but I didn't, okay? So I'm still in this, still holding it. Gotta watch the close. Here's the close. So it's gonna close as a spin top candle, 50-50 with a tiny bit of blue volume. They opened it bullish ignited, 945 open. So I'd like to see maybe a quick rejection where it doesn't even need to continue to fill up these wicks. A quick rejection and a flip bearish and drive back down and reattempt to fill that lower wick, which can happen during Wall Street, okay? Remember, this is bigger volume now. So now it's continued to come back down. So maybe this will be the 15-minute push that could break that low and trigger more liquidity down into here. That's what I'm hoping for, to follow this now 15-minute candle that could continue to come down with 15-minute volume going into 10 a.m. and to continue to test that lowest point of the day, okay? And NASDAQ came right down to that yellow line, guys, that 23,888. So right now, we are building a little bit of support from the low of the day right there. So you know when I draw a green zone, we are building now some current support right here in the market on the 5 minutes. So I'm in a sell while
the market is developing a little bit of support here, okay? So we got to continue to see where we can close. Will we flag down here to continue to break this? Or that's it. Now the buyers have stepped in at the lowest point of the day and they're holding it. Then we could return all the way back up, okay? But one zone I'd like to look at is, you know, this 930 candle. That was the first 5-minute volume of New York. So let's kind of figure out the point of control. Open, close with the Fibonacci right here. In case we drive into it, right there, open, close. So that red line, I'm just going to move it to the 0.5. Right there, and you can see it's traveling right up to this zone as I'm doing it right now. So that's the point of control from Wall Street. Right there. Okay, so that's Wall Street's point of control, that first 5-minute candle, 930, right there. So we got those equal high wicks. You can see the 200 EMAs right there as well at that 50% red marker. You got the 9 EMA. So this could be technically where there could be a possible bearish crossover where the 9 crosses below that 200 as it's testing in here. Excuse me. So I am in a little bit of drawdown here on this trade, but now it's testing the point of control. So if it kind of closes above here, that's it. Then I can see that they momentarily held the lowest point of the day, you know, and it could now rotate right back up to the bigger zone. So I have my stop loss right there. I will verbally let you guys know as soon as I get stopped out of this. Okay, I got stopped out. Shit. Okay, so big return off that lowest point of the day. So now what I do is I make a mental note now that that's a strong base that they built right there. So, you know, that's strong support, the lowest point of the day. Very, very strong. It could rotate back down later on today, but what I do is now I get ready, place an alert down there. If it does come back down, I could go back into that, or the market can prove to me now it's really bullish. You know, closing above here. That's it. Could be continuing to go up bullish. Man, we had 2 attempts to break that lowest point of the day, and it didn't. The buyers held it strong. It could technically come back down, but I got to wait for it. Or I got to flip my bias. If it closes above here, could be continuing buying pressure and come back up. Same with NASDAQ. If you got that, came back down to that daily point of interest, had you done something good, congratulations. If you didn't, you know, it could rotate back up, okay? So that created a big double bottom from the 5 a.m. bottom, okay? So now when I look at it, I analyze, came down, okay, and then a big move up. But on that return back down right there, equal bottoms, lowest point of the day, buyers were strong. I give it to the buyers. They were strong. They held it up. You know, so again, but I don't keep stop loss going forever, right? Some traders do that. I don't. I give it enough room to breathe. Yes, I know it could come right back down, but I could get right back into the trade. But I choose not to right now. Buyers are showing the strength going into 10 a.m. Wow, gold is very tough to trade right now, okay? So be careful with gold. Rob, yeah, so yeah, no, we tapped into FGV, fair value gap. Yeah, the sell was also a possibility, of course, but it didn't like it because the open fair value gap up there, bit of ICT stuff. No problem. Everyone has their own analysis. You know, some days when I'm taking this, the market is breaking and then it goes against ICT traders, all of this. I don't really do that. You know, the market doesn't care about ICT, doesn't care about SMC, doesn't care about point of controls. The market will move where the market wants to move, right? So All we can do as traders is I got to control my risk, right? I gave it enough room to breathe, but that big bullish candle, I could have placed my stop loss higher. You know, the woulda, shoulda, couldas, still been in this. I don't trade like that. I don't trade would have, should have, could have done this. You know, I was looking 2 times on that candle to break. It didn't. Stopped me out. I could definitely go back in. Or I can just wait to see another bearish engulfing candle. Then with more momentum, then it can break down. However, it could also build another structural support and come right back up. So, you know, sometimes I don't want to engage in this barcoding where it's bullish, bearish, could come up bullish, again, bearish. Now I want to see. Now it's coming down. Let's see now. Will it take out that lowest point of the day? This is now when they should take it out now. Oh, Nick, you didn't get stopped out? Nice. Oh, fuck. You see, I screwed up there. I had my stop loss just at the bottom of the red zone. If I placed it a little higher, maybe at 45,700, right above that red zone, I could have been safe. But again, I didn't. So I don't want to be one of those traders that make excuses. I'm not here to make excuses. I got stopped out. I got stopped out. Got to live with it. I took a loss. L. Put L's in the chat. I don't give a shit, right? I don't care. I took a loss. I verbally told you guys I took a loss. No problems. But now we got to continue to stay focused. I don't take my eyes off of the volume. A lot of traders, you know, after a win, after a loss, they take their eyes off. I don't. I continue to watch. I still have my bearish bias. Okay, yes, I understand. I got tapped out, but I can still trade with this. Okay, so now we got 2 more minutes to go into the close. Is this big bearish candle going to be the one that takes it out? See, look at that 15-minute candle. Look at that candle. That was bullish, 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 bullish. Tapped me out, came right in that red, and look at the big rejection. So maybe heavy sellers are in that zone. I can see them now, but can they at least, with all of this down pressure, take out that lowest point of the day, right? If it holds, you can see then literally how strong that 45,575 purple line lowest point of today is. It's part of the game. I understand that, guys. I know. I've been trading for a while, as you guys have too. You know, you're going to take some wins. You're going to take some losses. I understand. But some traders, you know, when they get tapped out, they revenge trade. They get pissed off. Like, you know, like I'm upset. I'm not going to lie. I am upset that I got tapped out by a few points and watching the candle come right back down. But that's okay. I can jump right back in. But I don't want to just trade on revenge. I don't want to just trade because I'm mad. I want to literally see, can the sellers take out that low right now? And while I'm not even in this trade, let's watch. Right now, it's still technically holding. So now I got to just clean up these red lines. Follow this bearish engulfing candle coming down. And we're going into 10 a.m. in 5 more minutes. Take note. I look like and sound like a guy Hell Mike from Kick live streams. I have no idea who he is, but shout outs to him if I look like him. But again, guys, I don't follow too much streamers. I don't follow too much social media things, so I don't know all of these guys you're mentioning and things like that. So I apologize. Just me. I have no time in a day. I barely have any time in the day to make a post of myself, let alone watch other people. Okay, look at it. Bullish, ignited, open. Did not break that low. Still holding, okay? Let's see now if it gets rejected at 50% of that base of that big bearish engulfing candle right there. Can I find my point of control off of that candle right here? Okay, there was a nice rejection. They could slam this one down. This could be the one that rotates down. You know, you could, if you want, trade this one on impulse and move with that 15-minute bar coming down. Okay, this is the one that could potentially break. So it came down to break, went back up. Let's see if it refuels itself, ready to break. This could be one of those ignited bars to take down. Okay, get ready. I might take it, guys. You know, I'm watching, came back down, came back up. Will it come back down? Okay, it's a spin top candle. Does it need to come back up and retest this location? Or is it enough selling volume to continue to push it down? Notice we have not taken out that purple line as of yet. Okay, and then I look at the time. I know they could break it right now, but watch how they bait you in, okay? Watch. It's 9:57, 3 more minutes to go. Watch. They'll probably bait us in to sell it. It'll come back down, 1 or 2 minutes to go into 10 a.m., bait us in to hit the sell, and then 10 a.m. will be maybe a push back up. Watch. Let's see. I'm going to leave the pathway there for us to watch. I'm not taking this trade. I don't want to get baited into this. Watch. Okay, it's a spin top candle hanging around. Believe me, when it comes down like that, I love intuitional trades like that, but I don't want to get baited in at 10 a.m. because I know the game that the market plays. I know the game. Okay, so it's coming back up bullish. You know, NASDAQ found good support at that point of interest. Could start a 10 a.m. leg coming right back up. So I could switch my bias to be a buyer now. You know, forget selling that lowest point of day because it could be building with buyers now. I hate when Wall Street trades like this. I like when it's a nice trending volume. This will test you. This will really test you. Okay, now we got 90 seconds to go into the close. Let's see, watch where this volume will close. And then also you can take a look at your 1 hour candles. Okay, so we've got a big bearish 1 hour candle, but notice how it didn't take out that lowest point of day. But even the 1 hour candle could close below those 1 hour bodies right there at 45,605, I would say, right there, body. I know it's a lot of lines, but right there is an hourly point of interest right there. So let's see if that hourly volume, if it doesn't take a low day, will it at least close below hourly support and maybe have a next 10 a.m. push down? Okay, so I like to watch it on the 5s. There's that white line right there representing that hourly point of interest. I know it's a lot of lines on my chart, guys. It is a lot, I admit. Okay, so this candle is bullish, volume showing closing in 10 seconds. Still did not break. 3 wicks came into the near that lowest point of day, holding all strong so far. But volume is still maybe closing below this 5-minute body right here. So get ready. Here's 10 a.m. Are they going to push it down? Or is it going to come right back through here? Could be, you know, I know it's a lot of pictures I'm going to put on the chart here, but this is a consolidated flag right here. You know where this current volume is? I know it's trapped in a little tight area right here. Gold is unclear. Yeah, gold is a tough one today. Gold is tough right now. Okay, so if this bullish body, the first 5-minute candle of 10 a.m., closes back above this red zone, we could have a double bottom inverted zone. Okay, so what I mean is it came down during Wall Street near the lowest point of the day. Fortunately, it did not break for me in a sell. It came back up. There's our neckline, the 5-minute box right there, and came back down. Okay, again, we didn't break that lowest point of the day. Now we got some buyers bringing it right back up like a double bottom. So if we can close above here, somewhere above here, we could invert that red zone green, maybe invert it. What I like to see is like a sweep of the low, then invert. I know some of you guys use those type of concepts. I know those concepts myself too. It's sweeping the lowest point of the day and inverting this and reversing the move back up. But notice today, we did not take out the lowest point of the day, okay? Nick, you should have closed when I got back to break even. It's okay. It's all part of learning, Nick. You know, just as you're learning, I just recommend you do smaller sizing as you're learning, okay? So it takes the emotions, takes the stress out of it while you're learning. That's just my opinion, you know, to anybody that's learning where to place a stop loss, how to, you know, take profit out, go to break evens, all of those things, okay? Just while you're learning, this goes for everybody, just lower your sizing while you're learning. You know, it takes time to learn. If you go higher sizing, you're not really learning. You're going to probably panic while you're in the trade, and you're not really looking at the price action anymore. You're looking at your profit loss report, and then you're taking your eyes off of the most important aspect of trading is price action. Okay, and NASDAQ came all the way down to that daily point of interest, coming right back up. Let's see where it will close. Guys, I'll stay with us for another 5-10 more minutes. And then I got to take off, and then Dave will be stepping in right after. But I just want to see if this zone will kind of get inverted here. Next 2 more minutes, we can wait for this to close. However, if it gets rejected back down, we could have that one leg that will definitely maybe take out today's lowest point of the day. Is today news? We've already had today's news. It was at 8:30, the PPI news. Tomorrow we have high impact as well with the CPI news. Have a wonderful day, Sherry. Congratulations. Another great day trading. Have a great day. Thank you for joining us. I might have one more trade left in me, guys. One more trade. Okay, so they pushed it up again, came to that daily point of interest, pushing it down. Here's the close in 45 seconds. Okay, if they close it back bearish down here, we might have one more, you know, attempt, bearish leg down, back in this bear flag to take out today's low of the day. One more attempt could possibly happen. Get ready, guys. Okay, so it looks like they rejected that move, pushing it back down. We might close still below this red zone in the next 20 seconds. However, buyers could bring it up the last 20 seconds and close it back above here. So it's going to be important to watch the close of this bar. Dave doesn't have a YouTube channel. He's on the Zoom with us in the private Discord. Okay, so it closed again, bullish right in there. So when we come back down, this is kind of an intuitional trade, guys. Intuition, if you kind of want to go with the flow in the red zone pushing down, you know, if you want to wait it out 5 minutes, unfortunately you got to wait it out, or you got to go to the singles and watch these single bar candles, okay? So I'm on the 1 minutes right here watching, okay? So it is dropping. I can see the 1 minute candles come up, came back down, came down, close. Here's it pushing down, 30 seconds to go in the close. Where will this 1 minute bar close? There was a nice pronounced double bottom. One bottom, two bottom on the 1 minutes. Struggling with this neckline area right here. Okay, here's the close on the 1 minute. closed below red zone, open, blue ignited, watch for a quick flip retest. Okay, if it gets a quick wick, could reject off of there, yeah. Okay, so it's a spin top, get that blue, will it come back down? Blue, follow it, back down, blue, follow it. Okay, I'm going to go into sell. And I'm placing my stop loss above that red line, right above that 1 minute 200 EMA. I'm going to try and go back to the 5 minute and play the 5 minute candle. Looking to come back down into the green zone. And hopefully with this attempt now, take out the lowest point of the day and drop down there. Okay, so I got in on the 1 minutes, but now I'm going to follow it on the 5s. Okay, this is my last trade of this session. Let's see if it can continue to push down, take at that lowest point of the day. My stop, again, above here on that yellow line for protection. Sorry guys, if you're watching NASDAQ, red to green on NASDAQ. So that's my stop loss just above that yellow line. I went with the 1 minute, I was just above the 1 minutes and that 200 EMA on the 1 minutes. But more so just be protected here. This is my last trade of this session. I'm going to see if it can push down. Looks like it's bullish return back up. So this could be one of those inverted zones. This is where those buyers and sellers are fighting. We can watch it on the 1 minute. I'll verbally let you guys know. So my stop is like kind of right up here. Okay, stopped out. Sorry, guys. Still, it's strong, guys. That's it. I'm done. That double bottom is holding strong. Looks like strong markets. Strong markets today. You know, they want that all-time high. Let them go after it, and it will revisit this FOMC. Could be the buy the rumor, sell the news event. Excuse me. Guys, that's it for me. 1 win, 2 strikes. Not a good day. Not a good day on my side over here. So we got to refocus, shift focus, come back tomorrow, come back stronger tomorrow. I got to learn from my mistakes here. Maybe I should have had that buy bias, you know, at this lowest point of the day. Sorry, guys, I had a sell side bias, and I just couldn't get off of that sell side bias. You know, it happens. But even the daily candle, I don't think it's decided where it wants to go. For US30, in fact, it's kind of indecision. I know, yes, later on it could possibly come back down. But again, that's not how I trade. I trade, you know, with a bias. I had the bias to break this lowest point of the day. Fortunately, it didn't happen. But we got to refocus, shift again tomorrow, come back in the markets. Tomorrow we can't let loose. We got CPI data. We'll see how markets are moving tomorrow. I'm done trading for this afternoon. I'm not even going to come back in and entertain any trades. I got a lot of things to do, so I won't be back in. One win, 2 losses. Not a good day for me. But, you know, man, I just couldn't get off that sell side bias. Couldn't shake it off. So it is, you know, it is double bottom right now in the 5 minutes, could continue to break out. So, man, tough markets for Wall Street this morning and yesterday. Some tough markets. I hope we don't trade all of September like this. We had a really good summer trading in July and August, really good volume. I hope we don't go through a little rut right now in September where it trades sideways during Wall Street's, because I know everyone loves to trade Wall Street market open, but if it's like this for the next couple of weeks, we're going to start to introduce some other sessions during post New York's, maybe some London sessions, maybe some Tokyo sessions, and start to show that everything is not always about Wall Street. There's also other times in the day that you can look for trades. But guys, I appreciate you guys so much. You know, you guys put up with me. Thank you guys so much. I know there's other streamers that do a better job than I do. God bless them. It's not easy to do this. You know, I hope that they do a great job explaining things as well. But we appreciate you guys, all of you guys that stuck with us. I do appreciate you guys. You know, all of you guys that hit the like button. Again, I really do appreciate you guys. You guys that subscribe to the channel. We hope we earned your subscription. You know, some days we have off days in the markets, but we do have a track record of taking good positive trades while learning. So guys, my bad today. It's my apologies. Hopefully I can rebound. I'm going to review this shit again later tonight and figure out, you know, man, why did I have that sell side bias and I couldn't get off of it? That's what I got to figure out, guys. You know, when you go back to the drawing board and we have days like this, I want to be honest with you guys. I'm not a 100% trader. No trader is, but I got to go back and figure out, like, not right now, because right now I'm not thinking properly, but come back after I cool off, come back, go for a walk, and I got to review this. Like, there was one attempt there, one attempt there, one attempt there. Why did I continue with that sell side bias to take out the low of the day when the market was proving to me that it was continuing to come up with higher lows? So I got to learn from that, guys, you know. And just got to get better and better and better, okay? But we'll see you guys tomorrow. Again, 6 a.m. Eastern. Be ready tomorrow. We got CPI news at 8:30 and our weekly unemployment claims, okay? And gold is trading a little, you know, little erratic right now too, but it did eventually get close above this big red zone. So, you know, if you're going with flipping the zones, it is still bullish. You know, we're above here building. Maybe it will get back up to the daily high, right back up to 3657, could take it out, and then I would be looking at 3661, and then your bigger daily point of interest is 3665 on gold, okay? But it's trading a little erratic right now too. Maybe the markets need to settle down. Again, sometimes 11 a.m., noon, you know, sometimes markets pick up and trade a little bit better. But, you know, when it's this type of volume, I'm not going to say NASDAQ is trading good volume. US30, a little bit, but still stuck in these zones. Red zone, green zone. It's still, look at the daily candle. Still, it's this bearish indecision candle. It's struggling with this opening price, coming down to the lowest point of the day. Tried for those two sells, didn't get them. Coming back up. Will it come back down? Possibly, but that's it. I got my 3 trades of the day. 2 were strikes. You know, I got to come back tomorrow, okay? So, guys, my bad. My apologies. Hopefully, everyone just traded with some proper risk management while we're learning. And I'll see you guys tomorrow. Thank you guys so much for all the viewership on YouTube. We do appreciate you guys. Respect to all of you guys. And thank you everyone on Zoom. We'll see you guys and enjoy the rest of the session with Dave. And you guys catch some pips with Dave and maybe you catch some better volume at that time. Okay. So we'll see you guys tomorrow. Thank you guys so much. Have a great day.
Hey guys, good morning, welcome to the live session of Stocks Network Trading. My name is Dave, guys, my partner is Ron. Let's get down to business here, guys.
In on US30, sell, okay? I'm jumping in. Guys, that's a 100 pip drop. Yes, we caught it. Hey, guys, 200 pips, please, secure.